with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year.
Okay.
We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Welcome back. You're watching Small Cap Buzzers here at NDTV Profit. Now, the next one that we're going to talk about is a very interesting counter. Creative New Tech is a company with a market cap of 1100 crores, a top line of around 2000 crores for FY26, but has received an order of over 3000 crores that they announced recently. Now, on the back of that, the stock is up almost 15% throughout the day. It's maintained that gain to understand what the company does and what this order means for the company. We now joined by Parth to give us that entire perspective. Parth, over to you.
Absolutely. So a really big order win for the company of around 3200 crores, which is given by BharatNet for their Odisha project. And this is awarded by a BSNL-led consortium. It includes the design, supply and network deployment, and also includes the operational and maintenance services as well. The execution period for this order will be around 3 months. And now let's understand why this matters a lot for Creative New Tech. Because as you mentioned as well, that the order size is way above their current market cap as well as FY26 revenue. It not only strengthens their government infra credentials, but also gives them really nice annual annuity services revenue, because it includes the O&M services as well. Now moving on to the management's bigger bet over the upcoming years is that they are expanding across surveillance, AI and cyber security. They are building presence in drones and IoT solutions, along with targeting data center and HPC opportunities as well. In the recent con call, management has highlighted a strategy in which they are targeting a revenue CAGR of 25 to 30%, along with the PAT CAGR of 30% in the coming years. Their brand business is expected to grow at a rate of 50 to 60% per year, as the management is aiming for a brand to distribution mix of 50-50 by 2030. Also, the new categories in which the company is expanding, they are expected to grow at a rate of around 10 to 15% as well. So really good order win, along with a really nice future look for the company.
Right, Parth, thank you so much for getting us those details. Narendra, any view on this particular counter? I mean, it seems to be an interesting one, right? Like I said, 1100 crore of market cap, 2000 crore plus is what they've done in top line for FY26. But now a 3000 crore plus order win is what they've gotten.
Yeah, again, we do not have any coverage or recommendation, but yeah, looking at the order wins, I think it's sentimentally positive. But I think whatever I've read about this order win, it is a part of a consortium. So I think one needs to really look into it, what kind of a share the company has in the consortium for the overall order pie. So that would be a critical detail which needs to be studied.
Well, thank you so much, Narendra, for joining in and having a conversation with us. Pleasure to have you. Yeah. Well, moving on, EMS, the again stock which is buzzing on the back of order win. Let's pull up that chart as well. The stock is up almost 14% in trade. Of course, this is on the back of order win by this company, but let's bring in Shivam for more details on that.
Yes, the EMS stock has been up around 14% and seeing a strong momentum. The trading volume has also been up around 60 times the average volumes. Now, before moving on, let's see what the company does. So, EMS Limited specializes in providing turnkey projects in water and wastewater collection and the treatment and disposal. Now, the company has also received a recent order in which is worth around 103 crores from UP Jal Nigam Limited, and the company will lay and join sewer networks and provide home sewer connections. And the time period for the execution of the project is around 24 months. Now, if you look at the Q4, the company has recorded a weak performance where the company's performance was impacted by the external execution, and the company has stated that the 100 crore increase in inventory was partially completed, and if this inventory was billable, the Q4 standalone revenue of the company could have been around 184 crores rather than just 84 crores. The West Bengal elections have also halted a few of the projects for sewer laying execution, where the management was expecting around 70 to 80 crores per quarter, but in quarter 4 executed only around 20 crores, which implies around 50 to 60 crores of quarterly shortfall. Now, apart from that, the bitumen supply disruption was also there due to the Middle East war, which prevented in the road restoration, and also the company going forward is looking towards a positive performance where they target a EBITDA margin of around 25%.
Okay, Shivam, thank you so much for getting us those details on EMS. The stock trading 13% higher as we speak. But the other one that also remains in focus is HG Infra. Now, the stock is up over 4% in trade today and has held that 4% mark, although off from its day's high point. But this is after receiving a completion certificate for a 4,900 crore Ganga Expressway project. Jasmeet joins us with more details on that. Jasmeet?
Well, thank you, Mahima. As rightly said, the stock is buzzing on the back of a couple of news flow. But before we get into the news, let's quickly understand what does the company do. Well, the company operates into the infrastructure solution space where they provide infra service solutions for infras, dams, road building services. Now, in terms of stock performance, the stock is buzzing in today's trade. It's gaining about 4.4%. But in terms of the overall performance of the last 1 year, the stock is nearly down 48%. Over the last 6 months, the stock is on 28%. Now, in terms of why the stock is buzzing is the couple of news. The first one is the completion certificate for almost 5,000 crore worth of project, which is almost 151 kilometer of the stretch of the highway, and the particular project has declared fit for development. The second news is the company stake sale. The company sells almost 49% of its subsidiary to a new infra fund for nearly 377 odd crore, and this is the reason the stock is buzzing in trade. While that subsidiary nearly adds 6% of the revenue for FY26, and the company sells it at a higher valuation, which is bringing a positive up move in the overall stock movement. And overall completion of this deal is expected to be in the month of September.
Thank you so much, Jasmeet, for all the details. But viewers, this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned. Ask Profit Afternoon edition coming up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and solve all your stock-related queries. So if you haven't already, do start sending in on the number that is flashing on the top of your screen. You can also call us for your stock-related queries as well. But before we do that, as we always do, a very quick check of how the markets are doing, because it was a day expected to start under pressure, and it did so and did not disappoint in that sense. But we've slipped back below the 23,200 mark. So we started just a tad below 23,100. I think at morning 10:30, 11 o'clock, we did try to recover 100 points from there. And there you see over the last hour or so, we've given up a lot of those gains made throughout the day in just this last 1 hour. So a crucial session, and hopefully the last 90 minutes positively seeing some recovery, but currently seeing some pressure on the index. When you look at the heat map for the Nifty 50 as well, there are some stocks within the hospital space. Max Healthcare continues to do well in today's trading session. You're also seeing broader recovery actually in the hospital space. So Apollo Hospital is up. Fortis, not a part of the Nifty 50, but is also up doing well. And Power Grid is up 1.6%, while Wipro continues to be one of the biggest casualties of the day. Yet again, for the second consecutive session, stock is down 7% now. Eternal also has been very volatile. Some on one day it is in the gains, on the other it's seeing 2.63% downtick, and today is one of those days. As well as TCS and M&M continues to be under pressure as well. When you also talk about the sectoral heat map, it's not a one-way street where there's one sector like in the previous week IT was, which was down 5% on Wednesday. It's not a day like that. You've seen a 1 to 2% correction across the board, across major sectors and indices, and there hasn't been recovery apart from the healthcare and the pharma space as well. But the advance decline ratio also has been kind of down and out in today's trading session. You've seen the advances actually decline, fall further in terms of numbers. So 2,000 stocks that are declining in trade today, almost getting to that 4:1, favoring the declines at this point of time, and largely visible in the mid caps and the small caps too. So we've seen a broader market recovery in the last 2 to 3 trading sessions. That's not the case today. So pull up the mid cap 150 down 0.8% almost, and the small cap as well. It's continuing to be under pressure. A further 1.3% down for today's index as well. In terms of individual movers also, let's quickly look at those. And I'm guessing a lot of queries on those stocks. So Tata Tele, First Source Solution, RHI Magnesita, and now you're seeing the Sterlite Techs and the HFCL of the world also starting to hit lower circuit. It has been a one-way rally for stocks like Sterlite Tech and HFCL, now taking some money off the table as well. Some good moves on CCL products, Balrampur Chini as well as Syngene International, but you're seeing pressure on the indexes today. And to solve your stock related queries for today, we're now being joined by Vishnu Kant Upadhyay. He's the EVP Research at Master Capital Services, as well as Radharaman Agarwal. He's the Managing Director and CEO of Swim Advisors. Gentlemen, both of you, thanks so much for joining in. Let me go across and take the first question from Balasubramaniam, who's from Bengaluru. He's been trying to reach us in terms of calls, so apologies to you, Balasubramaniam. We'll try to patch you one day, but on his query on Reliance, he's holding shares at 1176 rupees per share for the last 2 years. So he bought that in May 2024. Now, Radharaman, he's asking if he should still continue to hold this counter. You have that potential listing also expected in this year. Would you recommend him to continue holding? Should he add more? What's your opinion?
So I think he's a long-term investor. He's already holding it stock for some time, and given the positives around the stock, given the geo listing around the space, so the timing obviously will depend on the market condition. But I think he should continue to hold the stock and take a long-term view on the particular stock and keep holding it.
Do you recommend adding more at this price as well? Radharman, it's not very away from his buying price. Would you recommend that?
I would recommend to maybe buy the current price to hold on, but for a medium to long-term perspective only.
Got it. Let's go across and take our first caller for today. And this is Murli, who's dialing in from Hyderabad. Murli, very good afternoon to you. What's your query?
Yeah, good afternoon, sir, and also all the panelists. This is Murli from Hyderabad. I have a query on Apple.
Okay.
I have balance 10 shares at average of 1090.
Okay.
I sold a couple of shares, around 10 shares when it was 1900 plus.
Okay.
So should I hold the remaining, or if I exit totally, what could be the other good stock or Acme Solar should I enter?
Got it. And Murli, you entered this with a long-term view, or was it largely that when you sold at 1900, it was a fundamental view, right?
3 years I am holding now.
3 years, got it. Radharaman, let me come back to you then. He sold shares at almost 1900 odd, stock trading just a tad below 1500. But would you recommend him to just exit, book the profit, move on to something else?
I would recommend to book and then maybe take something else. I think linked to other stocks as well. So you can book the complete profit and take out the whole piece out of it.
And his question also was if Acme Solar fits that bill of investing, would you recommend that?
So Acme, in fact, had a very good round of institutional fundraise, I think, 2 days back.
Yes, QIP, yeah.
And very, very solid set of investors coming in. For a medium to long run, we can definitely add Acme to the portfolio.
Got that view, but let's go across and take the next question. This is from Ram from Hyderabad. He's holding 20,000 shares of Canara Bank, bought at 135, and asking, and that's largely for the dividend purpose. He wants a view now on the technical front, if he should still continue to hold this counter or no. Vishnukant, very good afternoon to you. Would you recommend him to continue holding or book, because he's currently sitting in a loss? So what should be his strategy?
Hi, very good afternoon. So definitely from the PSU space, there are a few counters. Among them, Canara Bank is looking quite good. So their stock for last, few days are doing immensely well, and I believe this gain should be, continued to 145, 149 sort of level. So definitely he should hold the position with keeping his stop loss below 126.
Got it. So 126 is the level to watch out for on Canara Bank, according to Vishnukant. The next one is from Radhakrishnan from Kochi. Now, it's an interesting question that he's asking. He wanted a view on Indian Overseas Bank at first, and also asking if he can also accumulate City Union Bank. It's also had a bonus issue of 1:3, and he's planning to keep it for the next 1 to 2 years. Radharaman, between the two or both of them, would you recommend buying on for Radhakrishnan? What would you recommend on both these counters?
So I think maybe given the scenario, switching from a smaller bank maybe to a slightly larger bank, in the PSU space, that makes more sense because the balance sheet and everything gets stretched there on a smaller side. So my suggestion would be to maybe look at a larger bank like a SBI or a Bank of Baroda. On the private front also, if I look at maybe a bank like an RBL and all, that is something a good space to get into.
Hopefully that answers your question as well, Radhakrishnan. But let's go across, take another question now. And this one's from Gautam from USA. He wants to know if it's a good idea to sell out of Jio Finance, which is currently at a 20% loss, and buy into the AMC name. So he's specifically called out Aditya Birla AMC as well as ICICI AMC for the next 12 to 18 months. Radharaman, what's your view? Because, we've seen the AMC stocks actually do well in trade, but would you recommend him to book a loss in one investment in Jio Finance and move to these counters? And within AMCs, do you have a preference?
I think SDFC, AMC is a preference in terms of what you can look at. And booking losses, I think Jio, in case for long run, obviously can hold good. But on a short run, I think that migration might help him. So he can book the losses here and then move to an SDFC, AMC kind of a play.
Got that view. Let's go across and take another query, caller query now. Sudhakar Joshi from Sambhaji Nagar is now dialing in. Sudhakar, very good afternoon to you. What's the query?
I'm holding Dabur, 1,900 shares at average 14 rupees, 14 rupees price. Very long period.
Very long period. So I think you bought it in the IPO, right, Sudhakar?
Not IPO, I purchased it.
You purchased this after, okay. And has it been more than, because 14 at...
Bonus also, we have as we received 2 bonuses.
Sorry, how long have you been holding these shares, Sudhakar?
Very long, it may be more than 30 years.
30 years, well, it's definitely been a good investment for you. Many congratulations for that.
Now.
Okay, and you want a short-term view, Sudhakar? Like you want a technical view?
Good afternoon. I am holding this share from very long period.
Okay, but so do you want a fundamental view or do you want a technical view on this one?
Both.
Both views, okay. Got it. Let me go first come to Vishnu, because you know, Dabur actually, he's bought it at just 14 rupees, holding for over the last 30 years. But has been in a sideways momentum for a while. Is there any change expected or would you recommend him to exit?
He's sitting with a very, huge gain, in fact. But, for last many months, the stock has been a very lethargic or lenient. And from the technical standpoint, the stock is trading below the cluster of all key moving averages. And in fact, the good thing is only that the stock is trading above its a crucial horizontal support, aligning somewhere around 405. So I would say as long as prices are trading above this level, he can hold the positions. But my suggestions will be shifting, their stock or investment from Dabur to, stocks like Varun Beverages and Nestle India.
Would you second that as well, Radharaman? Because, it's almost 1,900 shares bought at just 14 rupees. So the investment is quite minimal. Would you recommend him to just partially exit, buy something else?
So I think my suggestion would be that maybe he's holding it for quite long. I think it's about 30 years, what you mentioned. But given the prospects from a point here, Nestle India has been doing quite well. If you look at from the FMCG space, the kind of growth they have reflected. So I think he can maybe look at a switch from a Dabur to a Nestle.
Both fundamental and technical experts recommending a switch. A few stocks mentioned across Nestle, Varun Beverages amongst others. So hopefully that answers your question, Sudhakar. Thanks so much for calling in. And the next question coming in is on Ashok Leyland. Our viewer has bought, Satish from Pune, is holding shares at 167, asking, a medium to long-term view. So he wants almost a 2 to 3 year view. What's your view, Radharaman? Should he continue to hold?
I think the volatility is given the stock right now on the short-term view is negative. But if I look at from a 2 to 3 year, obviously the CV cycle obviously will get turned. And he can hold on for a medium to long term, but from a short term perspective, the stocks looks getting into a pain right now.
Got it. The next question, that's coming in now, and this one continues to be on the banking space. So Union Bank is the other one. Madhava is holding 172 rupees per share. So he's currently sitting on a slight loss, asking for his 1,300 shares and what he should do. What would you recommend here, Vishnu?
Well, so the stock is currently trading above its long-term moving average, that is 200-day. And the good thing is that the prices are accumulating above this, long-term moving average. So I believe as long as prices are trading above 157, 156 sort of levels, he can, hold the positions, or he can also add the position at the current market rate. On the higher side, I'm expecting 184, 185 sort of levels can't be ruled out in near term.
185 could be a very interesting level for Union Bank. Got that view. The next question coming in now, and this one's on the metal pack. Our viewer Ranjini from Bangalore bought Hindustan Copper at 528. And the stock's gone up and then come back down again, Vishnu. But would you recommend him to continue holding these shares currently?
Basically, if their view is for a short term, so definitely not. because in short term, prices are expected to extend this losing streak towards 480, 475 sort of levels. But if he wants to hold the position for long term, with keeping a stop loss below 449, he can hold the position.
Got that view. The next question coming in now, and this one's on Wellspun Living. Our viewer James is actually holding shares at 127, and he's holding 400 shares. Now, so he's currently sitting in a profit, but Radharaman, his question being that the company is doing a buyback at 175. Should he tender his shares in or continue to hold? What's your view?
So you can tender and maybe rebuy the shares what gets actually accepted, because effectively all the shares don't get tendered in, and there's always a proportionate allocation. So maybe a strategic tool will be more in terms of tendering the shares and then maybe buying it back whatever share gets tendered.
A fair point. And one more question which is very interesting here, and it's from our viewer Mr. Iyer. He wants to buy into 2 to 3 pharma stocks. Let's pull up the Nifty Pharma Index for once. It's an index that's doing well today. And our viewer wants to know whether in the next 24 months he can buy 2 to 3 stocks and continue to hold them. So let's look at the constituents also very quickly for the Nifty Pharma, because the healthcare and the pharma space are the only 2 pockets that are doing well. So you've seen relative outperformance in stocks like Alchem Labs. The hospital space also a little underrepresented at this point of time in the Nifty Pharma. So let's look at the Nifty Healthcare as well. And hence, I think the questions, because we had quite a bit of pharma questions that we solved in the morning edition too. So it's a space that a lot of investors are watching out for. But, there you go, 0.6% up for the Nifty Healthcare. Radharaman, for the next 24 months, if you had to pick 2 to 3 pharma stocks across diagnostics, hospitals, as well as the traditional pharma names, what are some of the names that you could recommend?
Leading the pack will be Apollo Hospitals. I think that's one area one should be looking at. And then maybe Torrent Pharma is another stock which one can be eyeing in terms of the pharma space. I think these 2 stocks we'll be looking at.
And Anil from Hyderabad actually wanted a view on SMS Pharma as well. Any coverage there, Radhaman?
No, but that's not covered, so I have no idea on that.
On the charts, Vishnu, he's holding shares from roughly around 350 rupees. So he's currently in the green. But any opinion here?
Basically, a chart structure is getting little weak, in fact. But the good thing is that prices are still above its 200 exponential moving average. So I would say, as long as stock is above 340, maintain the position. If stock falls below that level, get exit from the position.
Got it. Let's take a quick call from Bengaluru as well. And Subramaniam has a stock query for us. Subramaniam, very good morning. Very good afternoon, in fact. What's your query?
Very good afternoon. I hold about 540 shares of Cafe Coffee Day.
Okay.
I have seen through the insolvency period. I would like to, average price is about 103 rupees. I would like to know what do I do with it.
And we've seen, a very sudden spurt of buying in the last week of May on this counter. But Radharaman, of course, today the stocks locked in almost down circuit and locked out in lower circuit, and it's down. And let's look at the 1-year chart also, because that buying spurt came in the last week of May, but has been in this range itself. Would you recommend Radharaman to just exit at the next possible opportunity out of Coffee Day?
Yeah, I think he should exit at whatever opportunity he's getting and look for any alternative stock on this space.
Got it. Got it, Radharaman. The next one that's coming in, it's on Bandhan Bank. Dr. Ravi Shankar is holding shares at 186 rupees and he's holding 970 shares. So he's currently sitting in profits of almost 16,000 rupees. Asking if he should hold on or buy more. Vishnu, what would you recommend?
Yes, definitely. He should hold the positions. I believe on the higher side, prices are all set to extend again towards 230, 240 sort of levels. Stock is in quite uptrend, maintain stop loss below 198.
Got it. Well, let's now start the rapid fire round in this edition of Ask Profit. Vishnu as well as Radharaman, you know the drill. The first question coming in now on HAL. Jaya from Bangalore is holding shares at 4470. Radharaman, what's a 1-year target is her question.
So I refrain from giving targets, but maybe look at an application of 20-25%.
Sorry, did you say 20-25% from the current levels as well?
Yeah.
Got it. And this you're talking about HAL, right?
Yeah, HAL.
HAL, okay. Got it. It's a very ambitious target, so just had to confirm twice. But the next question that's coming is from Divya and her question on Bank of Maharashtra. She wants a 3-month view here, Vishnu, holding shares at 79 rupees.
Okay. Whereas a hold the position, maintain the stop loss below 75. On the higher side, I am expecting 90, 92 sort of levels can be seen on the card.
The next one's also on Dynacon Systems. It's not a stock we discussed too much, Vishnu, but Dr. Lavanya is holding 200 shares at 1304. Stock's trading just a tad below that right now, and asking if she should continue to hold on or sell.
Well, so recently we have seen prices topping below its short-term moving averages, and I believe on the card prices are now all set to extend this losing streak towards 1140. So get exit from the counter.
Got also one more from Neha from Bengaluru, and it's again a very small counter, Roto Pumps, Vishnu. She wants to actually buy the counter for the next 6 months. Would you recommend that?
Roto Pump.
Yes, it's not a stock that we discuss too often, Vishnu. So any view, if you have one, could be helpful.
Yeah. One can buy the stock from the technical point of view. Maintain the stop loss below 56.
56, got it. Battu from Hyderabad is holding on to HDFC Bank at 755. Radharaman, question being first, should he sell out of this counter now? And second one, if yes, should he buy TVS Motors?
I think he should hold on at the current prices.
And is it a good time to buy more as well?
I would not recommend to add on right now, but he should hold on the current positions.
Got it. The next one, that's coming in now, and it's from Vijay from Chennai. He wants to know about Pidilite and if it's a good time to buy into it for the short term. Vishnu?
Yes, one can go long.
Avdesh Ojha from Delhi wants to enter into the banking space. We've discussed a few names, but between Bank of Baroda and Kotak and DCB, any preference for the next 5 years, Radharaman?
So Kotak Bank followed by Bank of Baroda.
Kotak Bank or Bank of Baroda, correct. The next one, coming in now, and this one's on GHCL. Our viewer wants to know if it's a good time to enter this stock for the long term. Any view, Radharaman?
Yes, can enter.
And one more, if it's the right time to enter between SRF as well as Tata Elxsi. The latter has been impacted because of the AI names, Radharaman, but both these stocks are multi-year low is what Subramaniam is picking up. Any preference between the two?
There is preferred between the two, so Tata Elxsi can be over.
Tata Elxsi, okay, a very interesting one because, with the AI play, stock's been in this corrective phase, but that was the last question of the rapid fire as well as this edition of Ask Profit. Vishnu as well as Radharaman, thanks so much for joining in, giving us your views across a whole bunch of stocks and spaces. But viewers, out of time on this edition of the show, thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be sharing with you such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets.
Welcome, you're watching India Market Close. We've stayed weak, but we haven't worsened at the very least through the day. Still about 200 odd points down on the Nifty. Alex, it's been a brutal Monday by all accounts, and following what's happening around the globe. The problem is then when the US markets are going up, we're going down. When the US markets are going down, we're also going down.
Yeah, and I don't know whether it's a sign of the times, but the only stocks that are doing well are the hospital companies.
Yes, that is true. Healthcare is having its moment in the sun today. The advanced decline ratio looking quite negative, 1:4. For declines to advances or advances to declines. Let's pull up the Nifty heat map and give you a sense of what that day has kind of been like, what the snapshot is today. I mean, this is a hammering. It's ex record date, so there's some technical reasons there as well. But I don't know if Wipro deserves this kind of brutality on the markets today. Eternal, Geo Financials, TCS, Indigo, all of it looking pretty dismal, except for a Max Healthcare.
Absolutely. So this is the one pocket of strength, as you were pointing out, and we were talking about as well. It's not just Max, it's also Apollo that's doing well, it's Fortis. But so here's the thing, and I'd be curious to look at the contributors chart, because take a look at this, 1.8% for Reliance Industries. TCL's also losing ground, not too much in the way of big movers. So there you go, right? HDFC, Reliance Industries proving to be the big drags. Not too far behind is ICICI Bank. So the very large 25-30% of the market, of the benchmark Nifty 50 is really proving to be a drag.
Is under pressure, and the volatility gauge is telling you the same story. Just pull up India VIX and you will see that in percentage terms, the fact, I mean, it's come off its spike, which was good, but it's still about 9% up, and thereabouts, even under 17 would have been better. If we can just pull up Brent, we can do that very shortly, but before that, the small cap and the mid cap. Okay, there you have Brent, 97.30. Now this is a 4.5% uptick. Alex, we've been off 97 for a while. You're back on top. That isn't feeling great either, because this Iran and Israel skirmish has now begun.
Yeah, absolutely. And the market is not very sure about what to make of it, despite, must be pointed out, the OPEC announcement of another output increase, right? So that's not really moving the needle too much on the downside. Normally, if that was just the case and there was not an escalation of tension, you would have actually seen crude fall further.
Because the problem is not the availability of oil, it's the passage through which it comes.
It is.
And that's now locked and loaded. Let's just look at the broader markets very quickly, the small cap and the mid cap, and the mood there is also somber, about 1% down on the Nifty. Mid cap 150, the small cap is actually worse off 1.5%, and through at the lowest point of the day right now as we speak. Let's pull up the sectoral indices, and I reckon apart from healthcare, it's all going to be pretty dismal. You're not going to see much up there in the green. Healthcare and then pharma and then CPSE. That's it. Realty, worst hit.
And metal underperforming for a second day in a row. And really a few of those stocks, Steel Authority of India Limited, Nalco, Hindalco losing ground again. So the underlying commodities losing ground is a bit of a talking point, particularly in the US when you have a situation where the dollar strengthens, when bond yields go up, you will have commodities falling, and that's reflected on the screen today as well.
Yeah, it's all quite painful. Just the top gainers and losers very quickly before we get you to the factors this afternoon. Top gainers and losers on the broader markets. On the losing side, Wipro, like we said, really getting hammered today. Tata Tele, FSL, Jindal, Aarti Industries and Sterlite, some of them. Most of them profit booking and then coming off really. Wipro, of course, the story of its own.
Yeah, absolutely. So, and on the other end of the spectrum, you have CCL Products, you have Kaplan Point, you have Syngene, Sheela Foam, Max Health again, Max Health, Fortis. These are hospital companies that are doing well. Not too much in the way of a theme really that's playing out apart from the hospital space that you can talk about.
Should I crack a bad joke? People's portfolios are in the ICU and hospital stocks are doing badly. Pardon me, just put it down to our afternoon trade. Okay, here's what's happening in the markets. The Nifty support range at 22,900 to 23,100. The Bank Nifty support range at 53,600 to 54,000. The Bank Nifty's technical setup is better placed than the Nifty. Defensives like healthcare, pharma are seeing buying. Small caps are seeing a bigger sell-off versus large caps. The rupee is seeing a strong reversal from Friday. That means it's weakening. Global yields remain elevated, and of course, geopolitical, AI, and liquidity concerns remain. It's a pain all around, but we're going to get a view now from Ben Powell, Chief Middle East and APAC Investment Strategist at BlackRock Investments. Ben, great to have you on the show. Thank you so much for joining us here at NDTV Profit. Do you see this as the lowest point before things get better, or is that question mark over semiconductors and AI trade just beginning to play out in your view?
I think we're still very much in the early stages of the AI boom. I think we can call it that. And actually, even over the last 2 or 3 days, we've had good news within the AI space. And over the last several weeks, earnings have been extremely strong. So the AI story still looks like it's powering ahead. But over the last 72 hours or so, we've had an inconvenient combination of a flare-up in the Middle East, significant missile attacks on both sides. And secondly, strangely, I guess, we had a strong US jobs number, which sounds like a good thing. But what that led to is a much more hawkish repricing of future Fed path. The market now expecting the Fed to be hiking maybe a couple of times looking forward. So the AI story continues to be very, very good, at least in our assessment at BlackRock. But it's been confronted with 2 headwinds, geopolitics and a slightly higher interest rate outlook for now is a challenge.
Ben, good afternoon from here. This is Alex. I'm wondering what the prognosis is for the relatively nearer term, and I'm talking about the next, say, 3 to 5 months. Because if you're anticipating that in the US, you will see bond yields move further higher, because policy rates will move higher, then the risk-free rate goes up. And so therefore, in that sense, traditionally it's risk off, right? And you're seeing concentration in several key markets. Take South Korea, take Taiwan, take a few other markets as well. So elevated volatility is on the cards?
Yes, and Alex, you're actually making a profound point. So let me just dwell on it for a second. We've moved from a world where inflation globally was no problem. I'm going back 5 or 10 years here. And what that meant was, I guess, the general kind of context was pretty easy for everyone, for central bankers, for market participants. I mean, simply put, when you've got 0 interest rates, because inflation is very, very low, you have a raging bull market. And now you have inflation. That is a problem for central bankers. And what it means for us as market participants is we've got a cost of capital, and some companies will fail to clear the cost of capital
other companies will flourish. So what that really means, the importance of active investing, really picking exactly where you want to be in the market. Maybe it's hospitals, as you were talking to, maybe it's AI, but we all need to be much more selective, thinking about those parts of the market where we can have earnings. It all comes down to earnings, right? Where we can have earnings that can offset that higher interest rate environment that we think is going to continue. So higher interest rates are a headwind, but some sectors, some companies will be able to clear that hurdle and flourish, as we've seen over the last several years. We think that can continue, but much more of an active approach, picking our spots. We think it is necessary in order for investors to flourish in the quarters and years to come.
Ben, I wonder what the view is on emerging markets, on India specifically. Just on Friday, the government and the Reserve Bank here announced and unleashed a slew of measures to attract foreign investors into government debt. There are reports that we've seen good inflows since then already. Do you think that that kind of sweetens the deal as far as India is concerned?
It absolutely does sweeten the deal. So we are now, as global investors, more familiar with this. A long time ago, I guess, but the COVID playbook being rolled out to some degree, very different context, thankfully. But we're seeing this sweetening, which just mathematically makes post-tax returns much more attractive for global investors. So that's a very, very clear incentive for global capital to flow through. So I think the RBI's announcements at the global level were a little bit overlooked, given everything that's happened over the last 3 days, geopolitics, the Fed, and so forth. But I think as global investors sort of wake up to this big change, again, this is not a discussion, these are facts. The maths is now more attractive. That's just true. And I think logically that will lead to inflow. So I think the RBI is doing very well, very sensible things, bringing back a kind of toolkit which has worked before. And we at BlackRock, the world's largest investor, we think it can work again, looking forward here to entice global flows back into India.
Does that work for equity investments as well at some point, Ben? Because these are measures to make post-tax investments in debt more attractive. Actually, tax is pretty much done away with as far as foreign investors are concerned. What about equity inflows? Because those still seem to be heading out the door.
Yeah, I think, of course, the currency is the key here. For us foreigners, it's all very well investing in sectors, but if we lose it all on the rupee, it can all be for naught. So I think getting this currency stability, which it seems to me is very much front and center in the RBI's mind, is completely critical. So clearly, flows in is supportive of the rupee. So even though it's a different asset class, these flows more likely to be flowing into government debt. Clearly, that leads to buying of the rupee, which is supportive. And if we can see a degree of stability, then global investors can get kind of back to the fundamentals around India's well-understood, well-documented powerhouse growth story, which we still think is completely right looking forward. It's just been overwhelmed, of course, by the weak currency over the last several quarters. So if this can speak to rupee stability to some degree, then yes, this can be in turn encouraging for global investors to flow through into equities. If I can say so, we kind of believe in the equities, but the currency's been a little bit off-putting. So if we can speak to the currency, that can help with the equities, we think.
So, Ben, slightly broader question on the latest moves in Hynix, for example, or in Samsung, and this is perhaps a conversation that was happening earlier today, which is developments in technology for one company that may challenge earnings outlook for some of the largest companies in the world, right? To say that we're projecting forward based on what we think AI will deliver on the earnings front, but things can change very dramatically, very quickly. And so what I'm trying to get at, Ben, is that you said that earnings ultimately has to support, and they have so far. But are we heading in a situation where the margin for error is very, very fine, and you could have a coming off of certain markets very, very dramatically because of the kind of concentration we're seeing right now?
Yes, the answer to this question is yes. If they disappoint, I think it will be dramatic. I think if you like, a marginal disappointment is hard to imagine. As we saw on Friday, again, it wasn't really that the technology space did anything wrong. We had 2-year Treasury yields creeping a bit higher, and that was enough to create the sell-off that we saw. And to your excellent question, Alex, I think it's evidence in the direction of what you're talking. If we do see disappointment, it will be pretty dramatic, I would think. The good news is for now, actually, the surprises continue to be to the upside. We as the market continue to underestimate the scale of demand, the scale of spending that the hyperscalers are pouring in to create the compute, to buy the memory, all the different kind of layers of the cake, as Jensen Huang puts it. So for now, the evidence isn't just kind of supportive, it's actually positively surprising. If that changes, we may change our views, but for now, we are overweight US equities, and clearly a huge part of that is the AI super boom, which continues, and the evidence, at least in our assessment, the evidence continues to be supportive, at least for now.
Ben, I have to ask you about the giant IPO this week, and the whole world is really looking at it. What do you think is going to be the impact when SpaceX comes and commands this kind of capital flow towards it? What are the second-order impacts you expect to see? And any views on the SpaceX IPO?
So I think that we've had a very inconvenient trifecta. 3 things have happened. 1, geopolitics. 2, slightly higher interest rates. And 3, which is what you're talking to, is there's just a huge kind of phone call to global investors. Can you send us some hundreds of billions of dollars? So we've got a few of these tech companies, not just SpaceX. A few of these tech companies are either raising capital through secondary offerings or coming to market for the first time. And the numbers, maybe as with everything AI, the numbers are just completely unprecedented. So we can think about, Saudi Aramco historically is the biggest IPO in history, raising around $25 billion, if memory serves correctly. When you add up all of the numbers we're expected to see in the days, weeks, months ahead, these are completely unprecedented numbers. So for now, we're in a little bit of an air pocket, as I say, geopolitics, interest rates a bit higher, and then a more technical aspect, which is, as I say, a phone call for some hundreds of billions of dollars. On the technical side, I'm not that worried. And actually, I suppose this is potentially an opportunity. If we are seeing capital flow out of perfectly gift holdings to kind of fund some of these equity issuances, then we're going to see selling for non-fundamental reasons. That's fine. That happens. This is what markets are for, is to raise capital. So I'm not objecting, but we might see kind of that selling creating opportunities. Again, we would be looking to very much pick our spots. This is a time for active, but on the list of spots we like continues to be AI as what we think is a mega force.
Mega force. All right. Certainly something to watch. Ben, as always, absolute pleasure speaking with you. Thank you so much for speaking to NDTV Profit. Ben Powell there, Chief Middle East and APAC Investments at BlackRock. Let's go across to just my colleague Jasmeet, who's joining in to talk about 101 days into the Middle East war and the fact that the Indian equity markets are clearly the worst off. And this is data that's pointing to this. Let's head across to Jasmeet to find out what has happened with this market and the rest of the world.
Well, thank you for that. As rightly said, the overall data does show that the India did perform in a very negative way when it comes to the overall war impact. Now, here's a quick brief of what exactly happened and where does the India market stand at the current stance. Now, when you look at the FII outflows, it nearly stood at 2.8 lakh crore in the last 100 days. Now, just to give a record of it, FY25 marked a historic outflow of roughly 1.58 lakh crore, while this 100 days of Indian equity, last 100 days have broken that record of FY25, and the FIIs have nearly sold 2.8 lakh crore. And for rest of FY26 so far, they've nearly sold 3.25 lakh crore and marks the second consecutive year for heavy selling. Now, when you look at the next point, the overall Indian market capital has slipped to 7th position from the earlier 5th position. This has happened on the back of the Taiwan and South Korea taking over the Indian market capital. That is on the back of that overall chip rally that we saw in coming in terms of the AI space. Well, the third point, the India slips to 6th position again from the earlier 4th position in terms of the overall GDP data as well. India had climbed up the ladder and reached the 4th in the month of Jan, but now we see a slip coming in on the back of that fear of war and the slow growth. In terms of the Brent, even Brent has spiked nearly 32% and currently at 97.12 dollar rupee. While in terms of the rupee overall, we see that rupee had depreciated nearly 4.7% so far in 100 days, and for FY26, it has depreciated nearly 5.6%. Now, let's quickly understand the markets and indices, how they have performed. We do make a quick analogy that the overall money has moved away from Nifty and moved into the small and mid caps. We have seen Nifty 50 is down about 6.8%, while Nifty Bank fell the most, down about 9.4%. While the money seen moving in mid cap and small cap, both gaining, while the small cap gaining the most, about 8.5%. When we look at the top gainers, we do note that the overall benchmark has underperformed the broader market, while the small cap indices have been the gainer. In terms of the key top gainers in Nifty 50, we have both the Adani stocks, that's Adani Enterprise, gaining over 43% in last 100 days, while Adani Ports is up 24%. While we also have Asian Paints gaining 15%. In terms of the top loser, we have something like TCS, HDFC Life and SBI both losing about 20% in the trade. Let's quickly understand the mid-cap space and what has turned out well for the mid-cap. Now we have Third Max, Adani Total, again Adani company gaining about 50%, while Premium Energy gaining 50%. Here we get an analogy that the Nifty 50 saw an uptick of 20 to 40%, but mid-cap top 3 gainers have gained nearly 50%. In terms of top losers, we have stocks like Ashok Leyland losing 32%, ICICI Prudent losing almost 26%, and then we also have Sundaram Finance. Now let's quickly understand how have the overall metals reacted. We did think that the overall war would create a panic and the people would move their money to precious metals. But here's a reverse game where we see gold has fallen nearly 18.2%, while the silver is a downtick of 27%. In terms of the base metals like overall aluminium, copper, and zinc, they have gained nearly 4 to 6%, while aluminium gaining the most at 60%. Lastly, summing up the entire thing, we do know that the precious metals have corrected sharply during the war over the last 100 days. We're seeing a double-digit downtick, but the overall gold and silver rally has come to an halt, which we saw coming in the beginning of the year. But lastly, the base metals have outperformed the industrial demand because the overall war has created a shortage of it and the crude has increased, leading to the overall increase in the overall transport rate. So all in all, so far we have seen a negative impact on overall Indian equities, but it's a wait and watch of how does the overall war fares up and will we see a reversal becomes a big question.
All right, indeed. Thanks so much, Jasmeet, for getting us those details. We're joined by Vineet Bolinchkar of Ventura Securities as well as Hemen Kapadia of DR Chokes FinServe. Gentlemen, thanks so much for taking the time. Good afternoon to you. Hemen, let me come across to you on your index strategy at this juncture, because we were expecting to see a little bit of a weak start to the trading week, and that has panned out. So what is the benchmark level strategy and how would you look at the Bank Nifty as well?
Very good afternoon to you, Alex. Thank you for having me on the show. Always a pleasure. There's a lower top, lower bottom scenario ongoing in the Nifty on the daily as well as the weekly chart. One gets a feeling that we are getting oversold, but being oversold does not mean there's going to be a reversal until you see follow-up price action. The VIX is slowly climbing back to 17. US, the CBOE VIX shot up by 40%, 39 point something percent on Friday. So crude is crawling back, but it's still not crossed a recent high of $98 or something, Brent, I mean. So frankly speaking, I believe one needs to stay slightly away from the indexes. They don't seem to be showing anything much, but surprisingly enough, Alex, the Bank Nifty is showing resilience. I believe there is some technical positivity. Whether this fructifies into something very more acute, I don't know. But relative strength coming in, and it's not made a new low. Nifty has, I believe, a bounce is there around the corner in the Bank Nifty first and probably then the Nifty. Alex.
Well, bounce around the corner, is that something that you would bet on him in? Would you buy a Nifty position right now at 23,200 odd where we are?
I would be, Tamanna, more comfortable buying a Nifty position closer to 23,000, 23,050. With a 50-point range, Tamanna. So around 23,000, I would be more comfortable taking a contra call. Or you can also sell the 22,700 puts if you want to do that also, Tamanna.
Individual stocks, though, Hemen, at this moment?
Okay, individual stocks over here, frankly speaking, is an options choice. But anyways, I have a sell call on AB Capital at 348, stop loss 358, target 328. Overbought, negative divergences, crossover sells, distribution happening on the verge of closing below the 55-day exponential moving average today. And I have a contra buy call on APL Apollo on the verge of giving an upward key reversal today. The trading session is obviously not yet over. Same logic applies. Oversold, positive divergences, crossover buys. A bounce is probably underway. So one can buy APL Apollo at 1830, stop loss 1780, target of 1930.
Okay. Vineet, just want to quickly get your take on whether you're seeing buying opportunities here. What are you finding interesting in today's trade, or are you in a wait and watch mode? You're on mute, I think, Vineet.
Absolutely wait and watch mode, and expecting markets to drift down further, because the Iran situation is only getting from bad to worse, and I think Trump is not calling the shots anymore. So that is going to be a clear negative for the market. And with SPI levels at all-time lows, I think there's going to be a lot more upside for the crude trade. And given that I am getting a little skeptical, and with on the technical charts also we are seeing breakdowns emerge. I think we could see we could be headed for a sell-off.
A further sell-off is what Vineet Bulinjkar is warning on. I mean, brace for that. Where are the opportunities then as things look a little gloomy for now? We want to focus on stock of the day. I mean, what's happened with Wipro is really noteworthy. It's facing pressure after the buyback expiry with weak guidance and client-driven slowdown weighing on growth as well. The stock more than 7% down today. Jasmeet, is this more of technical factors we're seeing because of the buyback record date, or are there serious concerns about Wipro that the street is showing you on the screen?
I wish I could give you a straight answer for that, Tamanna, but there is a combination of things we see here for Wipro. The firstly is obviously the record date, which got over on 5th of June, but we also have the fundamentals that has been weak for the company over a couple of quarters. Before we get into the stock of the day, I would like to give an analogy about the overall IT performance. We did make a note that the IT saw a rally from 14th of May and gaining up until the last week about 14 to 15%, and then the cool off coming in on the back of that fresh AI triggers. But something like a Wipro has fallen nearly 12% since that rally. So whatever it had gained of 11%, we see it coming off in today's trade where the Wipro is down 7%. Let's quickly have a performance check of this particular counter. From all-time high, Wipro is down nearly 46%, and over last 52-week high, the stock is down nearly 31%. Now let's quickly understand when was the last time that Wipro has slipped over 6%. Whilst it was interesting to make a note that the last time Wipro fell above 6% was on the back of the quarterly earnings. The first one was on the back in Q3 where the company gave a missed margin guidance of roughly 198 BPS, and the second one was again back in Q1 of FY25 where the overall revenue and guidance missed on by large. So we did note that the last two times the Wipro fell was on the back of the quarterly earnings, but this time the stock is down on various reasons. Starting off with the first one, we did make a note that the Wipro record date is 5th June as the overall buyback record date, and the arbitrage sellers are seeing selling since Friday, and the pressure continues this particular counter where the stock is down nearly 7%. Well, the second reason is overall guidance, which has been weak for this particular counter, where for the coming Q1 they have guided nearly between -2 to 0% going ahead, which is still weak for the company, and the stock has been falling since the Q4 earnings. When we look at the other key aspect, we do also make a note that the BFSI and Americas 2 being the two major segments of the particular counter, they have caused a drag in the Q4, and the management sees this drag going forward in the Q1 as well. So the Q1 is expected to be softer for most of the IT companies, but a more softer quarter for Wipro itself. Now, in terms of the other key aspect, where does the Wipro stand in terms of the overall AI race? Well, Wipro is doing 4 key major things. Well, the first one is they're trying to pivot the service as a software model with AI implied to it. That's what they're doing with AI plus service approach. The second one is they're pitching their old services, including the AI platform growth, where they have their own AI platform. They're trying to shift the clients from the service to AI platform growth. And the third one would be on the overall focusing of AI agentic and trying to create a repeat customer for the AI base, though they have not disclosed the AI revenue so far, but they're trying to create a repeat customer base. And the fourth one would be the using AI into their own organization and making the margins much more better and with the lesser amount of people, obviously. So that's the four things what Wipro is doing in the AI race. Let's quickly understand where does the Wipro stand in terms of the valuation. The 5 average valuations of Wipro stands at nearly 22 odd times, while the current PE for the counter is 14 times, and the 12-month forward is weaker than the current, nearly at 13.3 odd times. Now, if you look at the overall return potential for this particular counter, it's currently at 15%, though the return potential couple of days ago was roughly at 5 odd percent, but because of today's fall, it has increased to 15 odd percent. And if you look at the overall buy call for this particular counter, they are at 22, which is the weakest for top 5 IT firms, given majority of them have major buy calls, but Wipro has the lowest buy calls at roughly 22, and even the return potential is the lowest among the overall large caps. So all of we do make a note that the company has had weak fundamentals, and overall buyback ending is creating further pressure on this particular counter.
Yeah, absolutely. All right. Thanks so much for that. Vineet, even in the run-up to today, if we were not having this conversation today and we were having it maybe last week, if there was a case to be made for an IT company to be looked at purely on the back of valuations and to say that certain strides were being made for AI adoption, Wipro would not have been one of them. Am I wrong?
So I think that, the entire software services business needs a very large churn. There are a couple of things that are playing out. Number one is that, you need to have AI as a delivery model which will grow faster than the replacement of the software services business. And given the size of these large incumbents, I don't think that is going to be possible. And hence we will see declining margins. We are going to see slow build-up in terms of revenues, and that will not justify the valuations which are currently there. It doesn't help if the company is not guiding properly on the direction of the trade, and that brings in a lot of uncertainty. And to that, my mind is a double whammy, and I expect the sellers to continue. And it is going to be a very bad scenario, in my opinion.
Is there anything in the IT space that you would buy right now?
So I would look at, a few businesses which have got modes in terms of regulatory mode. So intellect design is something that I might look at. Other one is persistent computers is a couple of stocks that I would look at, because, companies which have a predominantly AI force and predominantly AI delivery model, will be able to circumvent this negative trend towards software services much better. So, and I think the services as a software theme, which is now playing out globally, I think these companies are better positioned to take that on.
Vineet, you're sounding more bearish than I've heard you in a while. Clearly because of everything that you're seeing. Is there anything that you're liking right now? In any space, any sector? Okay, you're positive on the markets.
Yes. But there is going to be a short-term sell-off that is happening purely, which is determined by your, the crude scenario that I told you earlier is unfolding. And it is negative. So I am structurally positive on the market, but right now the momentum is extremely against us.
Yeah, that's very visible on the screen. Well, one place where the momentum is definitely positive is hospital stocks. They're buying as investors shift to defensive, supported by a strong Q4 from Apollo and Fortis and improving volumes. Names like Max, Healthcare and Fortis are rebounding from lows, though valuations remain elevated. Varsha joining in to explain why hospital stocks are in vogue today on what is otherwise a very tough day, Varsha.
Absolutely. As you rightly said, people are actually shifting to a defensive sector, and hospital being one of them. The interest is because of the domestic exposure, which is what is attracting investors. This is due to the global uncertainty that we are seeing. Now, valuations, talking about, these are the key triggers, why hospital stocks are in focus. One of them being valuation has corrected from peaks, making stock more attractive in this space. Defensive sector buying picking up, as investors rotate the money from cyclicals. Also, if you see that we are seeing a strong volume build up, which indicates an institutional participation as well. And of course, the Q4 numbers for majority of the hospital companies were robust, and hence investors are bullish when it comes to this sector. Talking about price actions, if I were to talk about, for Max Health, if you see, there is a strong recovery from lows of June, number one. For Fortis and for Global Health also, we are seeing strong recovery from their lows. Talking about the outlook, this is where the investors are actually paying attention to. You have Max Healthcare, wherein they're entering a capex heavy phase from FY27, FY29. Over here, a lot of brownfield projects are taking place in Max, and hence people are bullish on this. You have the Gurgaon commissioning is expected by FY27, and even if you see the break even expected for the Gurgaon hospital is in FY28, and they're also expanding geographically with Bhubaneswar entry as well. Talking about Fortis, where they are planning 1800 brownfield bed addition over the next 4 years, more than 400 beds expected in FY27. Guides 15% of hospital business with 150 basis points of margin expansion, and they're also targeting to deliver double-digit growth when it comes to their diagnostic. This is where people are bullish when it comes to Fortis, and the margins is expected at 23 to 24% when it comes to the diagnostic sector. Talking about Yatharth Hospital, well, a small cap stock, but guiding almost more than what they did in FY26. They're confident of sustaining 24 to 25% of EBITDA margin, expects 27 to exceed 26 growth of around 36%. That's a very good point. On the Global Health, if I were to talk about, they're expecting EBITDA margins in 24 to 25%. Lastly, talking about valuations, valuations look attractive in FY28 considering the capex and the expansion that they are doing. Well, the cheapest is of course Yatharth at 25 times of its FY28 P. And let's see whatever we were presenting currently, let's see what analysts are making out of it. So for all the hospitals, if you see, they have given a buy call, and they are expecting more than 10 to 12% of return. So overall, people, investors, everyone is bullish when it comes to defensive sector, that is hospitals.
Okay, it's of little help though, because even though hospitals are doing well, it's pretty much the only thing out there today which is showing some signs of life. On the indices, Max Healthcare is doing okay, so is Apollo Hospitals. Hemen Kapadia, any of these that you would look at favorably?
Max Healthcare, Tamanna, looks like something which is, it's not a double bottom, but it's taken support at 920. There is very strong support. I believe a bounce is underway. I'm not sure this quantifies as something very significant, but yeah, in a market which is shorn of any green, this stands out like a oasis. Looks good if you have probably a 2-week sort of a view, Tamanna.
What about you, Vineet? How are you looking at the whole healthcare space, not just hospitals, but pharma companies as well?
So I think the diagnostic space is looking good. They will continue to buck the trend. And hospitals generally are looking good, but the valuations are a little on the higher side. So here you have to be very selective and picky and choosy. I think Agarwal Eye Hospital is something that I would want to look at, because it's more of a consumption, and you can do a high growth model out there.
Okay. All right, got it. We've got to slip into a very quick break. We'll be back on the other side to talk a lot more in the way of stocks. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. Okay. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards.
All right, welcome back. You're watching India Market Close, and take a look at the markets. You have cuts of about 1% or thereabouts for the benchmark Nifty 50, holding above 23,100 or thereabouts. We've got Osho Krishan, Chief Manager, Technical and Derivative Research, Angel One, joining us, as well as Siddharth Khemka, Head of Research, Wealth Management at Motilal Oswal Financial Services. Gentlemen, thanks so much for taking the time. Osho, at least it can be said that we're not we're not at the low point of the day at least, but the broader markets are seeing increased selling. So we're not seeing the short covering that some might have forecasted at the start today. What is your reading of the texture of the market as it stands right now?
Very good afternoon, Alex. Firstly, thank you for having me at the show. Well, yes, from the morning beginning only, we have seen a very strong breakdown on the technical front, because on the daily time frame chart, Nifty has formed a lower low in the recent period. So that has been very challenging for our markets. But the recovery was also powered down by the closing. So I'm expecting that with the kind of closure that we are witnessing in our market, the outlook looks very bleak. 23,100, 23,050 on spot levels seems to be the initial support zone, but I'm expecting that if the broader market or if the global market continues to have a sell-off pressure, then tomorrow we can see some kind of a strong breakdown below 23,000 as well. So overall, the technical view remains bleak. I'm expecting that any kind of bounce should be seen as a selling opportunity in the market, and one should not be very much aggressive in any kind of broader spaces also if the market sees some kind of bounce from these levels. On the higher end, 23,500. That is a major hurdle on positional basis. So until we see a decisive move beyond 23,500, till that time, better not to make aggressive long positions in the market.
Okay. What would there be a short position that you would be looking at, Osho? What would be your stock-specific calls, or this is more for the Nifty you're talking about?
This is mostly for Nifty. Nifty is having a very strong resistance of 23,300 to 450 spot levels. But for stock-specific action, again, there are mixed kind of sentiments that we are witnessing. For example, pharma and healthcare space is looking very positive for the day. There has been some major contribution from the healthcare spaces. So one should look for accumulation in those kind of a space, or even momentum play in the healthcare space. So some counters are looking quite positive. Not the whole market is looking positive, but again, one should be having a kind of a focus on the thematic movers. From healthcare space, I am expecting KIMS to have a decent movement. KIMS is approximately hovering around the zone of 805, 806. It has given a breakout. Last 3 days has been very positive for the counter. So I'm expecting that in the short-term period, the momentum can be seen to aggravate. On the higher end, 835.40 should be the target that I'm expecting. While on the lower end, 780 will be the strict advisable stop loss.
Okay. Osho, I'm just going to cut across to this very crucial interview we're doing with Union Minister, Petroleum Minister Hardeep Puri, in conversation with my colleague Aditya Raj Kaul of NDTV. Listen in.
The West Asia crisis, and that's why we are here to discuss this and a lot more with Union Minister for Petroleum and Natural Gas, Mr. Hardeep Singh Puri. Thank you very much, sir, for joining us. Let me begin by, in fact, asking you about this crisis, and that's the crisis of the common man. You know, for 12 years, Prime Minister has spoken of the common man and with the common man. But there's a burden of the natural gas, and this is a huge burden from the natural gas, the cooking gas, to the petrol. And there's a huge crisis. How long will the common man suffer, sir?
No, first of all, thank you very much for having me on your show. I've been a part of the Honorable Prime Minister's team for 9 of the 12 years. What has happened in the last 12 years, I think the facts speak for themselves. If you were to take any compilation of figures, I think they tell a story of remarkable and I would say revolutionary transformation. Where was India in 2014? Where is India in 2026? Gas, you were talked about gas. There were 14 crore gas connections. That means 14 crore families were led. Today that 14 crore has gone up to 33 crore, 30 lakhs families are connected. Pipe gas was 14,000 kilometers. Today it's 25,600 kilometers of trunk pipeline, going up to 30,000 kilometers. Ujjwala Yojana was introduced in 2016 for the economically weaker section. That today has 10 crore 60 lakhs beneficiaries below the economically weaker sections, below the poverty line, through a system. You're talking about the West Asia crisis. Do some context setting. The last time prices were raised in India was in February 22. Okay. And that was also when the Ukraine-Russia conflict took place. So it's not just one crisis. We have been through several global black swan moments.
Yeah.
The pandemic, which ended just before 22, was one of them. Didn't end, I mean, it eased off. Today we are in the happy situation that between February 22, when it was the last time the prices were increased, there was never any increase of price till February 28th of 2026, when the West Asia crisis started. In other words, 4 years, people said, चुनाव आने होते हैं तो आप लोग दाम कम कर देते हो, उसके बाद बढ़ा. अरे नहीं भाई, February 22 के बाद we had general elections in 24. We've had elections to state governments in Maharashtra, Madhya Pradesh, Haryana, what have you. Prices were never increased. Right. In fact, prices came down. Mm-hmm. What happened on February 28th? The facts are that the 90% of the crude imported by India used to come through the Strait of Hormuz. And nearly 60% of the LPG that India imported came also through the Strait of Hormuz. Yet, despite a massive global disruption, despite the fact that the Saudi CPU, mm-hmm. which is the benchmark mm-hmm. for LPG, went up by 50%, we did not increase prices. Why? Because as I said, after February 22 on 3 occasions, mm-hmm. November 21, May of 2022, and now a few days ago, the central government, thanks to the resolute leadership of the Prime Minister, who believes in insulating the common man as an article of faith. For him, it's an article of faith. He took the hit on the central budget. As a result of which, rupees 10 per litre on petrol and rupees 10 per litre on diesel were both absorbed. 1 lakh crore ka bill aaya, finance ministry took it. I mean, if I was in the finance ministry, I would also say, they're having to pick up other people, but that is the Prime Minister's leadership. Today, right. Interestingly, if you take Japan apart, Japan is the only country which has had an increase lower than India.
Right.
We are the country with the lowest increase in petrol prices or diesel prices or gas prices. Plus, if the opposition is talking about that, one question that they need to ask themselves after looking in the mirror is what is happening in the states where you are. Central government reduces the excise on 3 occasions, November 21, May 22 until recently, and we expect the state governments to correspondingly reduce their VAT. But do they do that? No. As a result, petrol and diesel prices are lower by 10 rupees in BJP ruled states that they are in other. In Delhi, for instance, BJP 102 rupees, Uttar Pradesh 101 rupees, Gujarat 101 rupees, Tamil Nadu 107 rupees, Karnataka 110 rupees, Kerala 115 rupees, Telangana 115 rupees. यार 15 रुपए का फर्क और 10 रुपए का फर्क between a BJP ruled state and non-BJP. That, my friend, is one of the reasons why the narrative that the opposition parties try to set against this government comes a cropper.
All right, we began by speaking about the West Asia crisis. Sir, you've been following it very closely. It's now 100 days of that West Asia crisis. How is India and the Indian government coping with the energy supplies right now? What is the situation right now? What is the stock that we have presently? And how are you trying to diversify?
Well, you've asked an easy question because your question is how are we coping and what is the stock? Some of your other colleagues who've done interviews with me earlier were trying to trap me into a hypothetical situation as to how long can you last this and how long will you... Right. Insofar as the current situation is concerned, I can tell you, thanks to diversification of sources, instead of buying from 27, we are buying from 41, buying from wherever we can. Earlier, we used to buy 5 million barrels a day for consumption, and we used to buy about 800,000 barrels, which used to come from the Saudis, the Emiratis, the Kuwaitis, Iraqis, and the remaining 800,000 from, all put together. After November 22, when we were buying 0.2% from Russia, now we were buying much more from Russia.
Right.
Let me also clarify this thing about the waiver and non-waiver. Look, there were two Russian entities which are under sanction, Lukoil and Rosneft. When that waiver was lifted, everyone who was not buying from Russia, okay, because of whatever factors, Europe, because of they had weaponized, they had ideologically looked at energy and weaponized it. Japan, they all started buying them. So Russian prices went up. Venezuela is the largest producer in the world, largest stocks in the world. It was selling only to China and to Cuba and one or two other countries. Now those sales have got banned. So India is present there. If we raise their production, help them raise their production from 1 to 3 million, we can buy more. Suddenly Venezuela has become a big fella. What, 500,000 barrels a day or so? But before the waiver, during the waiver, after the waiver, Russia has been, even in the month of February, we bought 1.04 million barrels a day from Russia. Today it's 2.5 or so. Basically, it is clarity of purpose, absolute focus, that you need to ensure that your consumer has availability at all times, that there was no shortcut or no cutout. Availability followed by affordability. The part I gave you about cutting excise and reducing prices was part of the affordability, and sustainability. We are making the transition from 1.5% of biofuel to 20%, introducing E85 flex fuel vehicles, going into green hydrogen, which is the fuel of the future. So all I can submit to you is that on all fronts of energy, and why is energy important? Look, apart from everything else, 19% of your tax revenue comes from this sector, employs a lot of people. Its inability to deliver on availability would result in chaos here. Believe me, if a country of India's size, which is used to, today, I asked somebody who 9 रुपए 7 रुपए 60 पैसे जब गैस के और पेट्रोल और डीजल के दाम बढ़े, forget about people who cite you surveys, some of them are surveys, some are fiction writing. I called somebody whom I trust on the ground level.
Yes.
I said, बताओ इसका 7 रुपए 60 पैसे बढ़ाने का क्या हुआ? He said, भाई साहब असलियत ये है कि जब ये युद्ध शुरू हुआ, people thought के पेट्रोल डीजल मिलना ही बंद हो जाएगा. अब किसी ने, अगर आपने 7 रुपए 60 पैसे बढ़ा दिया किसी के सेट में, 50-55 लाख रुपए की गाड़ी चलाता है कोई, उसको फ़र्क पड़ता है कि 7 रुपए पर लीटर, अगर वो 35 बनाया, या मोटरसाइकिल जो चलाता है उसको तो और भी कम है. और ना वो ये E85 जो हम बेचने जा रहे हैं, जो हीरो कॉरपोरेशन बनाएगी मोटरसाइकिल, वो 20 रुपए कम का बेचेंगे. बिकॉज वो कह रहे हैं एथेनॉल में थोड़ी सी नॉकिंग तो ठीक हो जाती है, एक्सेलरेशन भी बढ़ जाती है, पर थोड़ी उसमें क्या कहते हैं कैलोरीफिक वैल्यू ऑफ पावर थोड़ी कम हो जाती है, इसलिए हमने कहा उसको 20 रुपए कम का बेचो. आई थिंक फुल मार्क्स टू द प्राइम मिनिस्टर. ही इज कैरिड आउट, ensured availability, he's ensured affordability, and the sustainability transition is going on. So all said and done, I would say on the energy part we're doing all right. How long can you sustain it? Now this is a point. Some of your colleagues try to trap me. I told them, I said, any crisis has to have a time context. If it goes on, then it's not a crisis. Then you are in depression, yeah? I mean, forget about everything else. What is the situation of prices at the bunk in the United States?
Yeah. Okay, so we'll play out that entire interview for you on NDTV Profit going up ahead, but just a few minutes left to go for markets to close. Just want to get a quick word from Siddharth Khemka. Siddharth, thank you for waiting by, because we just wanted to cut into what the petroleum minister is saying at an important time. That's the biggest crisis, right, for India, and that's what's challenging us. Are you as somber in your outlook on markets as what the screen is showing us today?
Hi, good afternoon. I can understand. Yeah, we are all waiting for the cues and signals from global geopolitical developments, because while markets have remained consolidated for the last 1.5 to 2 years, and valuation seems to have taken the time correction, we believe that in the near term, especially the Nifty is likely to remain range bound. Mainly on back of the elevated crude oil prices, the continuous FI outflows, and a slow earning cycle. So what we have seen is FY26, the earnings for our Motilal coverage universe of about 370 companies, which is a large universe, it ended on a 15% growth. But for FY27, our so we are seeing
we're having
earning moderation going for divergence in the large caps to the mid caps, where mid and small caps on an aggregate are showing a stronger growth compared to large caps, where Nifty for the Q4 grew at about 5%, its eighth consecutive quarter of a modest growth. So overall, we believe that the next 1 to 2 quarters markets to remain sideways.
Siddharth, just a quick follow-up to that then. If you've adjusted your earnings expectations for large caps, mid caps and small caps for FY27, where does it stand right now for the universe that you track?
Yeah, I think that's very key and important question. So I would say that for the large caps, it would be about 7 to 8% for the entire year, and for the mid and small caps put together, we are somewhere between 17 to 18% earnings growth.
Okay, all right. The large cap is where the pain lies, therefore, understandably. Let's focus in on Vedanta, and the copper tech IPO hinges on reviving Konkola copper mines, but auditors are flagging serious going concern issues or risks on account of sustained losses and weak cash flows. Nimit joining in to tell us what is going on here. Nimit, what's the story?
Right, Alex. As you said already, this is a very key risk that's been flagged in a US IPO filing by auditors for Copper Tech, Vedanta's US arm that's looking to list at about 500 million later this year. But this is important not only for US investors but also for Indian investors, because what they say is that there is substantial financing and funding gap to revitalize Konkola copper mines, which is Vedanta Group's Zambian copper mine arm, and they say that the 2.7 billion plan that's needed to revive it may not come. Now, 500 million, of course, is part of the IPO. If that comes through, Vedanta has committed another 1 billion. But auditors say that if this money does not come through and the rest of it is not financed correctly, then there is a significant risk that operations may completely shut down and that investors will face huge losses. Now, to put this in perspective, they set out some numbers. They say that there is a huge cash flow problem and there's a huge earnings problem here. Konkola reported a $302 million loss in FY 2025 that reduced in FY 2026 but still remains heavily negative at about 47 million. Now what they say is Vedanta is critical to ensuring that this funding continues and operations continue, and they don't see where the additional funding is going to come from. That is the key risk that's been flagged. They say that even if the company raises more debt, it would come with higher costs, especially in the current market. And it says that equity funding, of course, means more dilution for US investors. And then, of course, it says that if that funding does not come through, the bottom line is the operations may completely shut. A key risk identified not only for US investors, once again, but also for Indian investors.
Okay. The stock is down about 4%, but then so is pretty much everything else right now. Pull up crude. Look at what's happening to Europe. European markets also in its opening seeing a bit of a pain point. 96.91 on Brent right now. European markets, the DAX down about 1%, the CAC about 0.5%, and these indices don't move even in these quantums usually. So this is showing that pain point is continuing in global equities as we're moving forward. Just look at what Trump has been saying, and the latest from Trump's comments is asking Israel and Iran to stop shooting at each other. Siddharth Khemka, from an Indian markets perspective, what do you think is the biggest worry? Is it clearly and simply just Brent?
So I think the biggest concern for markets going forward, I think, would be inflation, be it crude linked, be it other commodity prices which have been on the sharp upturn. And to add to all these, this year, the expectation of a lower or below average monsoon. So I think I would put inflation as the biggest risk over the next 2 quarters.
Okay. What would be your top calls after the kind of dismal day that we've had going into Monday's trade? Siddharth, I'm going to ask you that question first.
So some of, if you look at from an investment perspective, what we like, we believe that one should look at the stories with strong earnings visibility and structural domestic growth stories. So some of the sectors like manufacturing, industrials, which includes capital goods, defense, power, renewables, cables and wires, as well as some of the select healthcare and new age companies are what we believe should do well in the next financial year, in this financial year.
Okay. Osho, what about you? Any calls before we wrap up in the next minute or so?
There is a breakdown counter in my radar. LNT is looking quite weak. It has plunged below the 200-day simple moving average. It was hovering quite well for throughout the day, but in the last 15 minutes, there has been a strong crackdown. So I'm expecting this to continue. Again, 38.70 is the current market price on the spot zone. So one should consider that, keeping a strict stop loss of 39.30. And on the lower end, the first target that I'm expecting for tomorrow is 3800, then followed by 3760. So major of the counts are looking quite weak too.
So is it a short call that you're giving on LNT?
It's a short call, yes.
Okay.
For STBT kind of a perspective.
Okay, STBT kind of perspective, LNT, short call there. Just pull up that intraday here on the chart and you'll see that bit of a downtick coming in the last few minutes.
Yeah,
that's
quite
what
a few stocks actually
Osho
seeing
has
that.
caught. Yeah, it's gotten worse actually. Just pull up the Nifty intraday and let's look at where we're closing. Are we at the lowest point of the day? Close to the lowest point of the day, frankly, almost to the lowest point of the day. 23,070 was the low that we hit, and you're pretty much there about, just struggling to hold up to 23,100.
And you know what, Tamanna, the cuts in the broader markets are even more stark. So pull up the mid-cap index and particularly the small-cap index. It's very sharp here at this point, right? 2% lower for the small-cap index. You've seen a capitulation towards the end of trade and that big slide there.
Yeah, just pull up the Nifty heat map before we wrap up what's totally a mayhem-filled Monday. Very, very negative mood on the street. I mean, can it really get worse from here, or is this the time to pile in, is what you need to ask yourself, and where your appetite is. I mean, look at where Wipro is ending, Alex. 8.5% downtick. Did Wipro deserve such a beating? A Jio Financial, Eternal, Hindalco, Shriram Finance, all coming off. Adani and seeing some profit booking. Tata Steel, Max Health is the only one which is up there. Apollo Hospital is also about 0.5% up. Power Grid, Bharat Electronics. Watch out for the defense pack. Defense, there are some reports saying that there's going to be a huge push on defense from the government, so that is seeing some buzz. But otherwise, Bharti Airtel holding on and Neste holding on. Very, very defensive play, and I don't mean defense stocks here. It's pharmaceuticals and healthcare.
No, and a few real culprits in trade today. A few of the large caps in this pack as well. Reliance Industries, HDFC Bank will be in that list. So pull up the sectoral heat map just to close things out, and you will see that it's broadly a red screen. There's one pocket of green. Even the healthcare index, which was that pocket of strength,
there's barely a pocket of green. 0.01%. When you settle, you probably hold off. Look at Nifty Reality. This has typically been getting hit day after day, session after session, another 3% down.
And the metal index as well, close to 3% lower.
It worsened. The losses have worsened. So I would say the next 24 hours are very important. Look at what Donald Trump has been saying. He's saying, I've asked Israel and Iran not to shoot at each other. Vineet Bulinskar earlier in the show came and told us, but nobody seems to be listening to Trump. I think that's going to be the test over the next 24 hours. That is there any credibility left when he says we're so close to a peace deal, which is what we're seeing now.
Watch out for crude. That's going to be a fulcrum, and also watch out for long bond yields in the US and the dollar, because that's going to have a bearing on commodities. That's going to have a bearing on equity markets as well.
Let me add the third portion of that trifecta that Ben Powell of BlackRock was talking about, which is this call going from large AI and tech majors like SpaceX and Anthropic to every global fund manager saying, give me the money. And that's coming at the cost of the rest of the market. So that's perhaps what you're seeing globally as well. So brace for that. You might see that sell-off deeper in US markets overnight as well. But that's all the time from Alex and me and the team that put together India Market Close. Stay tuned. All the action continues on the other side on NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
Hello and welcome viewers. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have fared today. So Nifty ended the day close to day's low as geopolitical tensions in West Asia kept the sentiment on edge. Brent crude has surged past $97 per barrel mark, intensifying the global risk of cues. D Street stayed under pressure as benchmarks were dragged lower amid sharp volatility and also a broad-based sell-off was seen. So overall, markets have ended broadly weak as all the major sectors have closed in red. Realty and metals have led the drag, while auto and energy have also slipped into the back foot in a muted session. Let's look at some key counters that were buzzing away in trade today. First up, we have EMS Limited, which has secured a 103 crore order from Uttar Pradesh Jal Nigam, strengthening its presence in the water and sanitation infrastructure space. Now, the project involves laying and joining a sewer network along with providing household sewer connections, and also the contract is expected to be completed over a period of 24 months and also adds to the company's execution pipeline in the government infrastructure segment. Let's look at Stallion India now. So the shareholding changes are in focus at the company's fluorochemicals segment. Neomile Corporate Advisory has sold about a 2.5% stake in the company, also reducing its holding to 9.86%. So before the transaction, Neomile Corporate held about 12.39% of stake, and this move marks a partial exit by the investor, while it also continues to remain a significant shareholder in the company. Next counter to look at is HG Infra Engineering, which has received a completion certificate for its 4,971 crores EPC project on the Meerut-Prayagraj Ganga Expressway. So the project covers a 152-kilometer stretch of one of India's most ambitious road infrastructure corridors, and with the certificate now in hand, the project has been declared fit for the commencement of commercial operations. And the milestone marks a significant achievement for HG Infra and also further strengthens its track record in large-scale highway development. Next counter to look at is Zee Entertainment. So its board is set to meet on June 10th to consider a fundraising proposal. So the company has said that it may raise capital through the issue of equity shares or convertible securities, which is subject to necessary approvals. But the move comes as the media major continues to focus on strengthening its balance sheet and also supporting future growth initiatives. Investors will be watching closely for details on the size, structure, and even purpose of the proposed fundraise. Next counter to look at is D Development Engineers, which has reported a strong business update with its order book crossing about 2,400 crore mark. The growth was driven by robust order inflows of over 631 crores during the month, and this has been led by the piping and heavy fabrication segments. Now for FY27 so far, the company has secured cumulative orders worth about 682 crores. While executing projects valued at over 177 crores, the numbers highlight healthy demand momentum and also solid execution pipeline. Next counter to look at is Alembic Pharmaceuticals, which is expanding its international footprint with a strategic investment in Canada. Now, the company will acquire a 45% stake in a newly incorporated joint venture in the country following the execution of a shareholders agreement. Now, the venture will focus on developing, marketing, and even commercializing pharmaceutical products in the Canadian market. And the move underlines Alembic's efforts to strengthen its global presence and also tap new growth opportunities. Next counter to look at is Hinzing, which has taken a major step towards environmental sustainability by signing a memorandum of understanding with the Energy and Resources Institute, or TERI. So the partnership will focus on developing a 250-hectare ecological restoration project in Rajasthan, and the initiative is aimed at reviving the degraded landscapes, also enhancing the biodiversity and promoting long-term environmental conservation. Now, the project further strengthens Hinzing's commitment to sustainable development and even responsible mining practices. Next counter to look at is Indigo, which has unveiled an ambitious roadmap to become a global aviation powerhouse by FY30. Now, the airline plans to increase daily departures to 3,000, expand its international capacity share to 40%, and also accelerate its long-haul network. Now, the carrier is also seeing, strong growth in the premium travel demand and also cargo operations. Now, with more than 900 aircraft yet to be delivered, Indigo expects its fleet to really exceed 550 aircraft by FY30, also supporting its next phase of expansion. Next counter that was buzzing away in trade was Creative New Tech, along with its consortium partner, which has secured an advance work order from BSNL for the BharatNet Middle Mile Network project in Odisha. Now, the project, valued at nearly 3,195 crores, includes the design, supply, construction, installation, upgradation, operation, and even maintenance of the network. Now, the order marks about a major win for the company and also strengthens its presence in India's digital connectivity and telecom infrastructure expansion drive. Next counter to look at is Inox India, which has struck an optimistic note for FY27, and this has been backed by strong order momentum across its industrial gas solutions businesses. Now, the company has secured an order for its largest size tanks from a US-based space company and also expects more high-value orders in the coming quarters. And management has guided for 18 to 20% of revenue growth this year, with quarterly order inflows expected at about 450 to 500 crores. So, robust demand in both the domestic and export market is also supporting the growth visibility for the company. Next counter that was buzzing away in trade was JK Cement, which has taken a strategic step towards strengthening its raw material security by executing the mining lease for Mahan coal block in Madhya Pradesh. Now, the coal block spans more than 982 hectares and also is expected to support the company's long-term fuel requirements. Now, the development is likely to enhance resource availability, also improve cost efficiencies and provide greater operational stability for its cement manufacturing operations. Next counter to look at is MOIL, which is expanding its mining footprint with a strategic move in Madhya Pradesh. Now, the state-run miner has incorporated a joint venture with Madhya Pradesh State Mining Corporation, and this is focused on manganese ore mining. So, the new entity, MOIL MPSMCL Mining, which this will see MOIL holding about a controlling 51% stake, with the state partner owning about 49%. So the venture, now fully approved by the Ministry of Steel and also DPAM, is expected to boost the resource development and also strengthen MOIL's long-term production pipeline in the region. Here's next counter to look at is Phenotex's Chemicals, which is ramping up its global footprint with a major capacity expansion in the US. The company has added 150 million pounds per annum at its Texas facility, also taking the total manufacturing capacity to 350 million pounds a year. So this expansion, carried out through its subsidiary, Crude Chem Technology, is really aimed at meeting the rising demand from the oil field and even energy sectors. And this move strengthens Phenotex's North American presence and also enhances its ability to serve global customers more efficiently. And according to reports, HAL should have around almost 24 LCA Mark 1A aircraft ready by the end of this year. So this is a great development that is coming, and the production target marks a crucial milestone for Indian Air Force's operational capabilities. Remember, HAL already has guided for 20 LCA Tejas deliveries. Now, next counter to look at is BEL, which is in focus as reports say that the government is eyeing a large procurement of Hammer Smart Glide bombs for its Rafale jets. Now, this move aims to boost the precision strike capability. And notably, BEL and Safran had already tied up in November 2025 to really manufacture these bombs in India. Let's look at Vedanta now, which is planning a US listing for its copper business. But auditors have raised red flags. Its key Zambia mine is still making losses and also burning cash, raising concerns about how long it can really keep running without more funding. Now on to an exclusive story, viewer. Sources are suggesting that semaglutide sales in India continue to rise in May, but at a much slower pace than April. So the earlier surge were driven by strong demand, which has now started to cool off, especially in the injectable space. And quick commerce major Zepto is gearing up for its market debut, with sources telling NDTV Profit that the company will file an updated DRHP as early this week. So my colleague Rishika had, exclusive details regarding this. But moving on, viewers, let's go across to some national stories. The opposition's India Alliance is holding a key meeting in New Delhi today as its constituent parties look to bridge differences and even chart a common strategy against the BJP. Now, representatives from 23 political parties are participating in the discussions, which come in the wake of the recent electoral setbacks for some alliance members. However, the DMK and Arvind Kejriwal's Aam Aadmi Party have chosen to stay away from the meeting, highlighting continuing fault lines within the opposition camp. And viewers, Jaipur is witnessing a massive administrative operation as authorities push ahead with an anti-encroachment drive in the Jagatpura area. Now, internet services have been suspended, thousands of police personnel deployed, and also drone surveillance activated to maintain law and order. So the drive aims to widen a key road near Nandapuri underpass from around 30 feet to its planned width of 80 feet. Now, officials are saying that encroachers were given prior notice, with the direct auction now underway after the deadline has expired. And onto a sad update that has been coming in. The death toll in deadly South Delhi hotel fire has risen to 22 after a Nigerian national succumbed to injuries during the treatment. And the blaze tore through a hotel in the Horse Rani area of Malviya Nagar last week, claiming the lives of Indian and foreign nationals. And victims included citizens from several countries across Africa and Asia. So the incident remains one of Delhi's worst fire tragedies in recent years, with investigations now continuing. And severe weather at Delhi airport has left several aircraft damaged after strong winds and heavy rain, dislodged ground support equipment, and also 3 Air India narrow-body planes parked at Terminal 2 were hit and taken out of service following the incident. And airport officials have said that the equipment belonged to Air India, Engineering and Indigo, and sources add that aircraft of other operators may also have been affected. Now a probe is now underway to determine the circumstances of the incident. Now on to some international stories. Viewers, tensions in the Middle East have escalated once again as Israel and Iran have exchanged direct military strikes for the first time since ceasefire took effect 2 months ago. So Israel has said that its fighter jets carried out strikes on Iranian defense systems in western and central Iran after Tehran fired missiles toward northeastern Israel. Now, fresh explosions were reported in Tehran, raising concerns over a wider regional escalation and also the stability of the fragile truce. In fact, the Israel-Iran conflict is showing signs of further escalation. Iran has warned that its latest missile attacks mark the beginning of a week of continuous strikes. Now, the response followed Israeli airstrikes on Hezbollah targets in Beirut's southern suburbs, now which Israel said that were carried out after rocket fire from Lebanon. Now, meanwhile, reports are suggesting that US President Donald Trump has urged Israel not to retaliate against Iran as diplomatic efforts continue to prevent a broader regional conflict. And a powerful 7.8 magnitude earthquake has struck off the coast of the Philippines' southern island, leaving at least 19 people dead and more than 120 injured. So the earthquake hit near General Santos City at a shallow depth of 10 kilometers, also increasing its impact. Now, tsunami warnings were issued across the parts of the region, including Philippines, Indonesia, and also Japan, though most have since been lifted. So, rescue and assessment operations are now underway. And US Chinese President Xi Jinping is arriving in North Korea for his first visit in nearly 7 years in a trip that could really reshape the regional diplomacy. Now, Xi is expected to hold high-level talks with Kim Jong-un as Beijing looks to strengthen its influence over a neighbor that has moved closer to Russia in recent years. And ahead of the visit, Xi has reaffirmed China's commitment to its long-standing partnership with Pyongyang and also called for deeper cooperation, and including in the military sphere. Now, viewers, let's look at some sports news. Kimi Antonelli, Antonelli has delivered a stunning performance to win a dramatic Monaco Grand Grand Prix, stretching his Formula One championship lead to 66 points. And the race was twice interrupted by crashes and also a red flag. But the young Mercedes driver has kept his composure to claim the victory. And title rival George Russell has endured a disastrous day, finishing out of the points after a penalty mishap by his team resulted in an even tougher sanction, dealing a major blow to his title challenge. And Kimi Antonelli won the Monaco Grand Prix. Viewers, I've already spoken about it, and moving on, viewers, Alexander finally breaks his Grand Slam curse, winning the French Open title in a thrilling 5-set final and also capping years of near misses on the tennis biggest stage. And world number one Nelly Korda clinches the US Women's Open with a stunning comeback, sealing her second major of 2026 in a season marked by remarkable consistency and even dominance. With that, viewers, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. How are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you the investor don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook?
Market slides 1.5% with Nifty ending at a 2-month low as investors get spooked by renewed tensions between Israel and Iran. Wipro remains top loser after trading X buyback on Friday. Rupee ends near low point of the day at 95 rupees 71 paise against the dollar after being the best performing currency on Friday. Fall in the currency due to the drubbing across asset classes as crude prices rise amid renewed tensions. Oil prices surge over 4% with Brent back above $97 a barrel. What premium returns to the barrel as the fresh exchanges of fire between Iran and Israel threaten to unravel a fragile ceasefire. It's 100 days of war in Middle East impacted markets across the globe. Crude remains volatile, currently up 22.8% so far. Peace talks are underway, but so are the strikes between Israel and Iran as the world awaits Hormuz reopening. In response to NDTV Profit at the ISEC conference, SEBI Chief Tuhin Kantapande says that SEBI and RBI working to introduce derivatives on corporate bond indices and faster FPI onboarding path in works with the custodians' timelines aligned to boost flows, confidence and stability. Amazon is stepping up the quick commerce battle in a big way. In an exclusive conversation, Amazon India's Samir Kumar says the company plans to a massive $35 billion investment over 5 years, backed by an aggressive expansion. Indigo shares 2030 vision targets 3,000 daily departures by FY30 and increase in international capacity as share of around 40%. Despite the airline outlined an ambitious long-term growth roadmap, Interglobe stock falls over 2% today. Mumbai's Water Tanker Association goes on strike today over registration and licensing disputes. No breakthrough in association and authorities meet. The question remains, is bigger water crisis ahead? India bloc key meet underway in Delhi. Rahul Gandhi, Mamata Banerjee present in the meet while DMK and AAP skip. DMK left train guns on the Congress says more parties will quit alliance due to the grand old party. A powerful 7.8 magnitude earthquake struck off the southern Philippines island. At least 12 killed so far and massive tremors damaged and collapsed several buildings, including schools and commercial structures. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar and let's take you through all the top headlines that we have lined up for you. But first, let's begin with the equities markets. And markets ended sharply lower today with the Nifty really closing near the day's low as escalating tensions in West Asia really weighed on the investor sentiment. Selling pressure was broad-based with all the major sectoral indices ending in the red. Realty as well as metal stocks led the decline today, while auto and energy were the ones which really gained. All right, let's take it straight to Parth with a roundup of the market action today.
Nifty has closed in red for the second day in a row, down by over 1% today. This fall was led by Wipro and Jio Financial Services, in which Wipro saw a downtick of 8.5%, while Jio Financial Services was down over 3.5% today. The broader markets have underperformed the benchmark, with Nifty Midcap 150 falling over 1.5%, led by GE Vernova T&D and Muthoot Finance, both of which were down by over 6.3% today. On the other side as well, Nifty Small Cap 250 saw a downtick of over 2%, led by Netweb Technologies and Gujarat State Petronet, both of which lost over 7.5% today. On the sectoral side as well, all of the Nifty sectors have ended in red, with Nifty Realty being the top losing sector, down by over 3% today, led by Anantraj and Prestige Estates, both of which lost over 4.5% today. Nifty Realty and Nifty FMCG have snapped their 2-day gaining streak, while Nifty Metal, Nifty IT were down for the 4th consecutive day. Also, Nifty Auto, Nifty Bank and Nifty PSU Bank have snapped their 4-day winning streak, while Nifty Oil and Gas was down for the 2nd consecutive day. Also, Nifty Financial Services and Nifty Pharma have snapped their 3-day gaining streak.
All right, Partha, it's a sea of red today that was seen in the market. Let's also hear out what Hiren Ved, the director and CIO at Alchemy Capital Management, had to say about the markets. Well, he said that the market's growth opportunities are really increasingly concentrated in the mid-cap as well as select small-cap space. And here's his take on the road ahead for the Indian markets. Take a listen.
Very clearly, quarter after quarter, the trend seems to be that the growth is actually in the mid market, right? And also in some of the small cap stocks. But you have to be a stock picker. You have to, this is a bottoms up market, in a market that hasn't gone anywhere for the last 2 years, right? The Nifty levels have been pretty much at the same level for the last 2 years. I think there have been several individual stocks which have done phenomenally well.
All right, let's take it straight to the money market as well. And rupee, that ended at 95 rupees 71 paise against the US dollar, slipping to the day's low levels. As remember, markets really balanced India's strong domestic fundamentals against the lingering geopolitical uncertainty. So that was about rupee. It's now been also 101 days since the Iran conflict began. And the impact is really visible across markets, commodities, as well as the capital flows. India has navigated the period with relative resilience, but not without costs. And when we talk about crude, it continues to remain in focus today as well, with Brent really trading near $97 a barrel, with WTI above 94 mark, both up over 4%, keeping the energy security as well as inflation concerns really firmly on the radar. For a deeper look at how the first 100 days of the conflict really have reshaped the markets, let's bring in my colleague Jasmeet, who's done a lot of deep dive research. Jasmeet, over to you.
Now, here's a quick brief of what exactly happened and where does the India market stand at the current stance. Now, when you look at the FII outflows, it nearly stood at 2.8 lakh crore in the last 100 days. Now, just to give a record of it, FY25 marked a historic outflow of roughly 1.58 lakh crore, while this 100 days of Indian equity, last 100 days have broken that record of FY25, and the FIIs have nearly sold 2.8 lakh crore. And for rest of FY26, so far, they've nearly sold 3.25 lakh crore and marks the second consecutive year for heavy selling. Now, when you look at the next point, the overall Indian market capital has slipped to 7th position from the earlier 5th position. This has happened on the back of the Taiwan and South Korea taking over the Indian market capital. That is on the back of that overall chip rally that we saw coming in terms of the AI space. Well, the third point, the India slips to 6th position again from the earlier 4th position in terms of the overall GDP data as well. India had climbed up the ladder and reached the 4th in the month of Jan, but now we see a slip coming in on the back of that fear of war and the slow growth. In terms of the Brent, even Brent has spiked nearly 32% and currently at 97.12 dollar rupee. While in terms of the rupee overall, we see that rupee had depreciated nearly 4.7% so far in 100 days, and for FY26, it has depreciated nearly 5.6%. Now, let's quickly understand the markets and indices, how they have performed. We do make a quick analogy that the overall money has moved away from Nifty and moved into the small and mid caps, where we see Nifty 50 is down about 6.8%, while Nifty Bank fell the most, down about 9.4%. While the money seen moving in mid cap and small cap, both gaining, while the small cap gaining the most, about 8.5%. When we look at the top gainers, we do know that the overall benchmark has underperformed the broader market, while the small cap indices have been the gainer. In terms of the key top gainers in Nifty 50, we have both the Adani stocks, that Adani Enterprise gaining over 43% in last 100 days, while Adani Ports is up 24%. While we also have Asian Paints gaining 15%. In terms of the top loser, we have something like TCS, HDFC Life and SBI both losing about 20% in the trade. Let's quickly understand the mid-cap space and what has turned out well for the mid-cap. Now, we have Third Max, Adani Total, again Adani company gaining about 50%, while Premium Energy gaining 50%. Here we get an analogy that the Nifty 50 saw an uptick of 20 to 40%, but mid-cap top 3 gainers have gained nearly 50%. In terms of top losers, we have stocks like Ashok Leyland losing 32%, ICICI Prudent losing almost 26%, and then we also have Sundaram Finance. Now, let's quickly understand how have the overall metals reacted. We did think that the overall war would create a panic and the people would move their money to precious metals. But here's a reverse game where we see gold has fallen nearly 18.2%, while the silver is a downtick of 27%. In terms of the base metals like overall aluminium, copper, and zinc, they have gained nearly 4 to 6%, while aluminium gaining the most at 60%. Lastly, summing up the entire thing, we do know that the precious metals have corrected sharply during the war over the last 100 days. We're seeing a double-digit downtick, but the overall gold and silver rally has come to an halt, which we saw coming in the beginning of the year. But lastly, the base metals have outperformed the industrial demand because the overall war has created a shortage of it and the crude has increased, leading to the overall increase in the overall transport rate. So all in all, so far we have seen a negative impact on overall Indian equities, but it's a wait and watch of how does the overall war fares up and will we see a reversal becomes a big question.
All right, single biggest factor when we talk about the global economies as well as several asset classes. Thanks, Jasmeet, for getting us all those details. Now, amidst this ongoing concerns around global energy markets as well as the supply disruptions, well, the Petroleum Minister Hardeep Singh Puri says that India remains energy secure and adequate fuel availability and diversified crude sourcing. Let's listen in to the minister, what he told NDTV today.
You know, for 12 years, Prime Minister has spoken of the common man and with the common man.
What happened on February 28th The facts are that the 90% of the crude imported by India used to come through the Strait of Hormuz. And nearly 60% of the LPG that India imported came also through the Strait of Hormuz. Yet, despite a massive global disruption, despite the fact that the Saudi CPU, which is the benchmark for LPG, went up by 50%, we did not increase prices. Why? Because as I said, after February 22 on 3 occasions, November 21, May of 2022, and now a few days ago, the central government, thanks to the resolute leadership of the Prime Minister, who believes in insulating the common man as an article of faith. For him, it's an article of faith. He took the hit on the central budget, as a result of which rupees 10 per litre on petrol and rupees 10 per litre on diesel were both absorbed.
All right, an exclusive update coming in from the IPO market. Temasek backed Milky Mist really pauses its over 2,000 crore rupees IPO plans amidst the volatile market conditions. For more details, Nimit is joining in. Nimit, one by one, each day we hear one casualty from the IPO market. What are the details today?
Absolutely, and I think you said it, that's spot on right now. Milky Mist has joined a long list of companies that are citing the same reasons. It's volatile market conditions, poor investor appetite. They're also seeing slower listing gains, and Milky Mist is the latest of companies that include names like Flipkart, PhonePe and Cure Foods that are pressing pause on their IPO plans for now. Remember, Milky Mist also raised a pre-IPO round just a month ago when its IPO talks were advanced. So this is absolutely new news that they're now pressing pause on this despite raising an IPO round in May 2026, and then of course earlier in 2025 also they raised an IPO round. But it looks like a lot of these companies are suffering from the same problems, and you know, candidly, one of the sources I speak to told me that the war really needs to end if India's IPO pipeline needs to build out as robustly as it was building out in the earlier part of the year.
All right. Thank you, Nimit, for all the details. Of course, India has been presented as an IPO destination of the world and in the past, but at these valuations, definitely companies and investors shying away. Moving on then, Amazon is really stepping up the quick commerce battle in a big way, taking on the rivals like Blinkit, Instamart and Zepto, all of them that you have on your phone apps. Now, the company plans a massive 35 billion investment over the 5 years, backed by an aggressive expansion into new cities and strong AI push to really fuel their growth agenda. Here's a slice of the conversation with Samir Kumar, the country manager for Amazon India. Take a listen.
Amazon Now and about Prime, quite exciting. But I have to ask, Amazon's been in India 13 years, global giant, right to win, some would say. First mover advantage. So I reiterate my question and forget about the competitors here. It's my question. Why so late to the party? The quick commerce fight was here. The battle was here to win long before the other people came on board.
I think it's not about being late to the party. We are in the party and we are here to win. And as we said, like, it's still day one for e-commerce, for online commerce around the world. E-commerce penetration around the world is less than 10-15%. In India, it's about 10-15%. So even for the speed offering of minutes delivery, it's early days. We have, and there's room for growth, as we are seeing with our Prime customers. They're liking what we have built. So I don't believe we are late. We have started our journey and we love what we are building, and we remain excited about what we're going to deliver for our customers in the coming months and years.
All right, Amazon quite competitive there in the quick commerce space there. All right, while really replying to NDTV Profit's query on Rajesh exports and the fraud and misrepresentation of financials there, well, SEBI chief Tuhin Kanta Pandey said that the order is in place and law will really take its course on easing of the bond market transactions. He also said that SEBI as well as RBI are both working together to introduce derivatives on the corporate bond indices. Listen in.
Has SEBI made a mistake with Rajesh exports? Is what he's claiming. He's claiming that everywhere, that SEBI has made a mistake with the numbers when it comes to Rajesh Mehta.
See, as a matter of principle, on individual cases, we don't really comment on the media. Actually, this is a quasi-judicial process in which orders are issued and they have to be accordingly complied with or gone through in a manner which has been provided as per the law. So there will be no comments from my side.
So anything further on the tokenization that you announced last time, that the pilot is happening for the bond market? Any progress on that? When can we see new regulations for the bond stockbrokers as well as the tokenization program?
I think I had at that time indicated that tokenization pilot will take 6 to 9 months. I think that was about a week or 10 days. So okay. I think you have to wait for this.
All right, SEBI chairman there. Now let's shift our focus to the aviation sector. Interglobe Aviation is really eyeing 3,000 daily departures and targets international capacity share of around 40% by FY30. Now, the company said in its annual report that these are the visions and these are the targets. Danish, my colleague, is here to get us all the key highlights coming in from Interglobe Aviation. Danish, tell us.
Well, India's largest airline in terms of market share and fleet size, Indigo, aims to be a bigger airline by 2030. By 2030, the airline is also targeting to have over 3,000 daily departures and a fleet of over 550 aircraft. The airline is also targeting a 40% share in its international capacity. And in order to grow this international business, the airline is planning to focus more on long-haul network and increase the international to international traffic from India. As far as FY27 is concerned, the airline will be inducting 9 AC-21 XLR aircraft, which will enable the airline to fly to far-off places. Besides this, if we look at the overall capacity from FY27 onwards, the airline believes that as of now, it will be somewhere between low to mid-teens. But in the longer run, if we look at the airline's plans, then the airline is targeting to get back to a good growth rate of post 2028 onwards. Besides this, if we look at the old figures and the new figures, as far as premium seating is concerned, in the previous financial year, Indigo had 2,800 premium seats, but now by the end of March 31st, 2026, we are seeing that this capacity has increased to 4,300 seats. Besides this, the airline is also seeing a great demand for its business seats, which is also called the Indigo Stretch, and the aim is to expand it to 65 AC-21 aircraft and 40 XLR aircraft. Besides this, in order to grow further, the airline is also targeting to grow its cargo volumes. By FY30, the target is to increase it by 1.5 to 2 times, and the cargo tonnage target has also been revised to upwards of 450,000 tons by FY30. Very lastly, the airline continues to induct new aircraft almost every week, and as of now, Indigo has over 901 aircraft that are yet to be delivered. And very lastly, the airline is also expecting to increase its own ownership of aircraft, that is somewhere between 30 to 40% by FY30 from the current 20%.
All right, Danish, thanks for getting us all the key highlights from Interglobe Aviation. Now let's move on to another corporate development. Adani Port secured a 10-year marine service contract for Argentina's first LNG export, marking its entry into South America and also expanding its international marine services footprint. My colleague Varsha is right here with all the details of the development. Varsha, tell us.
Well, yes, Adani Ports is in focus as they have won 10-year marine service contract. This is for Argentina's first LNG export project to India. Company will provide tugboats, offshore logistics, supply support and crew transfer services. The contract execution will be via Adani Harbour International with Meridian Group JV. Now, why this is big? Because this will mark company's entry into South America, also expands its international marine services footprint, will also strengthen company's position in global LNG and energy logistics, which will also help to build a new India-Argentina energy corridor. Onto the investment and structure, about $70 million investment will be through JV with Argentina's Meridian Group. Argentina will export up to 10 MT LNG annually to India from 2027, and the first phase LNG output is at 2.45 MT annually, which is around 28 cargoes per year. Onto the execution timelines, well, the commercial operations are expected to start from September 2027.
All right, thanks Varsha for getting us all those details. Now from the new age space, another area besides quick commerce which is really getting very competitive is the cab aggregator space. And in fact, my colleague Danish spoke to Rapido, the co-founder of the company, Arvind Sanka, amid the new entrants in the aggregators market, competition and many other stuff. Listen in.
Talking about the business now, we are seeing that India's cab-based services, they have completely evolved over the past some time, and we are seeing that the new entrants that are coming in the entire scheme of things. Most recently, it is Green SM which has forayed into India. How do you look at the competition altogether that is coming in?
Oh yeah, I mean, so one of the big belief about from us about the industry is it is very less penetrated. So still very less number of people are using ride sharing. So any new competition or any new business models is more to increase the penetration.
All right, now to a news that impacts all of us equally here in Mumbai. Well, Mumbai's water tanker strike is set to continue, raising concerns over the water supply disruptions across the parts of the city. That really depends heavily on the tanker services. Efforts to really resolve the deadlock failed today after the meeting between the Water Tanker Association as well as the administration ended without a breakthrough. According to the association, authorities offered only verbal assurances and did not provide a written commitment on their demands with no agreement reached. Now the tanker operators have decided to continue the strike, keeping the services suspended for now. So that's a big development here in India. But let's take it overseas to the top international news that we are tracking here, right here on Profit 360. A powerful 7.8 magnitude offshore earthquake struck the southern Philippines, killing at least 12 people and injuring over 200. Many buildings have been damaged, including schools and commercial infrastructure, and the earthquake has triggered a brief tsunami. General Santos was amongst the worst hit, with structural damage, casualties, as well as missing persons being reported. In fact, the authorities are assessing damage amid strong aftershocks. Schools, flights, and key infrastructure were disrupted, and Philippines President assured full government support for affected regions as the emergency teams continue rescue and response efforts across the disaster-hit southern provinces. All right, quite a natural calamity there that Philippines is really dealing with. On that note, it's an end to this edition of Profit 360. Thank you so much for tuning in. Keep it with NDTV Profit.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome to KYC. I'm Sharad Dubey and you are watching NDTV Profit. This is the show where we get you a lot of stories which have been at times lost. At times there are new stories and at times a story repeats again and again. Interesting companies, but today also I've got an interesting company. We have earlier featured this company in KYC also, but try to guess this company. This was established in the year 2004 in Mumbai. The company is a CPaaS company. An interesting name, and remember there's just a handful of them in India. Of course the industry is not in favor right now on the Dalal Street. The company is now a part of Belgium-based Proximus Group as well. There seems to be a change of ownership in terms of promoters as well. But interestingly, the stock is up 26% from March lows. Let's discuss which company we are talking about. And when I speak about the CPaaS companies, and if it's from Mumbai, you must have guessed it by now. The company in focus is Route Mobile. But more than pros, there are a lot of cons in this stock. But why is it like that? Because the company's numbers came out in the fourth quarter, largely were mixed. But the industry wants to know what's the pressure on the industry specific front, at least on the company. We'll understand what's the guidance and the outlook going ahead for FY27. But question remains is AI a threat for a CPaaS player, or is there a silver lining? How does it actually matter? Also, enterprise CPaaS, the budget cuts have been there amid the macro tightening. Now, will that impact the client confidence for this company or for the industry? And also, is there an overhang still there of phasing out low value businesses, or is it done right now? Because that has been a big overhang in the stock for the last 18 to 24 months. A very limited success in scaling up of new products. And what are the timelines for it? Will they pick up? Because if they don't pick up, there might be another overhang in the stock. What kind of cross-selling synergies can some expect from Proximus Group? Because now they have a larger, much bigger group. So we'll try to understand that. And of course, the cash balance, that's where we see there is a good cash balance and the stock hasn't performed. So is there any reward for the shareholders, or is there any merger acquisition at play? That's the big question to be asked when it comes to Route Mobile. After a really long time, we have got this company. We'll try to understand the problems and what does the company talk about. Joining us would be Tushar Agnihotri, CEO at Route Mobile, where he'll answer all our queries. But let's try to understand what the company does. I'm sure you know a little bit by now about this company in the CPaaS space, but what is the actual story behind it? I'll get you that. It's established in the year 2004 in Mumbai. The company is a CPaaS player. Remember, this industry last 4 to 5 years ago, this was at its peak, but then, there was a lot of pricing erosion, especially in the low volume businesses. The company has cloud communication service as a platform provider. Also, looking at their key details, they cater to which persons? Enterprise clients they have, OTT players, and also mobile network operators. Apart from this, what's the portfolio? This includes solutions in messaging, voice, email, SMS filtering, analytics and monetization, and that is where we try to understand, is there any favorable acquisition at play or not? This is the key detail about the company, but as we go deeper into it, now they have a global presence, of course, in Asia, Pacific, Middle East, Africa, Europe and Americas, and now the promoter is itself, there has been a change, and now it's a part of Proximus Group. Now they are a provider of digital services and communication solutions, but the street is wanting by when the synergies start coming in. That is where the big question lies. The Proximus Global, the company I'm talking about, they operate in Belgium and also in other international markets as well. So we'll try to understand what's the core philosophy of it, and they're owning, apart from Route Mobile, they have Telesign and BICS as well. So is there any, you could say synergy at play? That's the big question to be asked. Over 5 billion people worldwide reach if you combine that for Proximus Global, and they've secured almost 180 billion transactions annually, connecting more than 1,000 plus destinations. So we'll try to understand whether the industry has commoditized or is there any specialty at play. How's the revenue contribution looking like? Of course, from Asia and America, that's where you could see one of the bulk of the numbers are coming in, and the way they are putting things out is almost the same. Largely, you could say 73% revenue coming from just these two categories. Apart from this, let's look at the client account by size, how things have moved. Largely, they have a lower number of clients which are just near that $1 million to $5 billion. That's where they're having the majority of the clients. Interestingly, the concentration risk is not so much as what I had seen earlier when I had analyzed Route Mobile. $15 million plus clients, 5 of them are there, and $10 million plus, roughly 8 of them are there. What may work for the company, and if you are bullish on the company, I have listed down some reasons. Do note it down. There's a depressed CPaaS industry valuation. Everybody has written it off. Bullishness is coming from the analyst community. Only 5 analysts are tracking the stock, but nevertheless, all of them have a buy rating. And if any AI related announcements comes and a use case is something which is made to understand the stakeholders, then maybe there might be more interest in the stock. Also, the merger acquisition hunt remains a top priority. Remember, they are having a decent cash balance. But what may not work for the company, that's where my concern comes in. There is a low margin business which is on a structural decline. Enterprises are migrating to OTT. That's one of the key concerns raised by the broking houses. Industry wide also, there's a cleanup happening of the A2P, SMS volumes, and largely things are moving from there. Enterprise CPaaS, the budget cuts are there, especially amidst macro tightening, and that's what we are seeing. So second, third order impact is happening to the industry. The limited success is there in the scaling up of new products. Largely, this is company specific. Only 8% of revenues contribution has come in. So we need to understand what's the timeline looking like for this work, and post-acquisition integration challenges are still there. So a lot of factors which have been putting pressure over the last almost 1.5 to 2 years for Route Mobile, and these are the factors which may not work for the company going ahead. But let's try to understand the KYC ratings, and let's see what has the company done over a period of last 5 odd years. We have tried to take most of the data, and the company has the data. So I'm going to give you the entire picture and the report card. Of course, this includes the income statement, balance sheet, cash flow, holy grail of financial numbers, and also the return ratios. Have they changed over the last 5 years? We'll try to understand the shareholding, because of course there has been a change happening. The street cred, has the stock actually made money? And of course the valuations, we'll try to compare that with Tanla Platforms, which is its closest peer. And the outlook also, we'll try to understand what the numbers is the company stating for FY27. Let's talk about income statement. I had mentioned earlier about the mixed operating numbers which had come in the fourth quarter, but the 3-year CAGR numbers are also quite dismal. Revenue, EBITDA, look at that. These numbers are in single-digit growth numbers. That means there is pressure in the industry. Is there a pricing erosion, or is there a commoditization? Because the numbers are saying the story. And also, if you look at the Q4 numbers also, the top line wasn't shown that much of a growth. Of course, some one-offs were there, where you're seeing the PAT numbers going up. But you need to understand and see the whole picture as a whole. Let's pull out the margins also, how things are maintained. Largely, this has been quite stable, so no complaint over here. Complaint definitely is there over the last 3 years, how things have happened to the stock itself. And of course, the management did speak in their presentations also about the pressure in the industry. So nothing moving much when it comes to the income statement. So it's a thumbs down when it comes to the overall income statement. Let's talk about the balance sheet. It's pretty decent, and I mentioned about it. It's largely a debt-free company. And remember, the promoter stake change has also happened. And look at this number, around 1389 crore rupees worth of cash is there. Largely for a cash-rich company like this, there would be some announcements, maybe like a buyback or some kind of a reward to the shareholders. But that's what we are waiting for from the management. And of course, in case any acquisition happens, by when the integration happens. So right now, it's decently placed. So I'm going to give this a neutral rating when it comes to the balance sheet. So we spoke about the income statement, we spoke about the balance sheet. Let's talk about the cash flow and show you how things are moving, and is there anything to watch here. Largely, we see the cash flow from operations have been decent from FY25. If you just compare these numbers, the conversion has been pretty strong, and the net total amount, that's around 32 odd crore rupees. Remember, a lot of restructuring, acquisitions has also taken place. so adjustments are there. So to keep things in perspective in a neutral manner, I'm going to give this a neutral as well for cash flows. But my concern starts coming in when we speak about the return ratios. Look at the ROC numbers. In FY22, it was almost 23, it was 22%. Before that, it had even touched 30 odd percent 3-4 years ago. But after that, the pressure started coming from 18, 17, and this is where a little bit of concern starts coming in. But nevertheless, it is not that bad also. Largely for a CPaaS company, having a 15% plus ROC numbers is decent. So let's keep it, both sides equal in our analysis and give this a neutral rating. Let's talk about the shareholders and see what's happening here. There is, of course, you can see a change in the shareholding pattern coming from the 58%. Now it has moved to 75%. But my concern comes is the participation of the FIs and DIs. 16%, 6%. Now that itself starts coming down, and now this comes at just 2%. A lot of movement happening when it comes to the public investors, and DIs also have reduced their stake. So a little bit of concern comes in. So this nullifies my analysis. So I'm going to give this a neutral rating. Let's talk about the stocks as a street cred, and this is where I think a lot of views coming in from our viewers who watch KYC, especially the long-term investors, came to me. From March lows, everything went up. So let's just have a look at this. From 2025 highs, the stock is down 52%. In just 1 year, the stock is down 49%. And from the past 5 years, that is where we see the stock is down 70%. So concern definitely comes in. So I'm going to give this a thumbs down as well. Let's talk about valuations, what has happened. 5-year average valuation for Route Mobile is at 20 times. For Tanla, it is 18 times. Now that's almost halved. Almost 9 times for the current P and 12 times only for Tanla platform. That means there has been a big de-rating for this entire industry. And whether this is quite cheap right now or not, that's where a big question mark comes. So I'm not going to give this stating that the valuations are very attractive, but yes, they have corrected massively from the peak levels or even the average numbers if I talk about it. So it's a neutral rating when it comes to the overall valuations front. Outlook, FY27 revenue growth, they have given mid to high single digit. Fair enough, decent. EBITDA margin is around 12%, which is there from the long-term average. There's nothing great in terms of guidance they have given. At least 80% of the total 5 analysts are having a buy rating because it's quite cheap and a big correction has happened. Now they are deepening enterprise partnerships and expanding into new geographies. Question is by when it will start happening. Leveraging AI-driven conversations. Is AI their friend or their foe? Markets are still confused. And of course, apart from this outlook, they are trying to understand how things move ahead from here. So right now it's still showing, there are some questions, there are some clarity. So I'm going to give this a neutral rating when it comes to the outlook. Let's understand the KYC ratings for this company, and that's where a little bit of concern comes in. And of course, we'll have the management to give us the entire picture. Income statement, the company needs to show the numbers, and that is how things will move ahead if it has to. Balance sheet, cash flow, return ratios has been largely neutral in my analysis. And of course, if you look at it, street cred has been a big pain. Shareholding valuation have kept it neutral, and so has the outlook been there. So the total KYC rating for my analysis for Route Mobile comes on the lower side of the average numbers we generally give. It is just 3 out of 8 for Route Mobile. But try to understand the company has suffered a lot of pain, and try to understand what happens next. And for that, we'll be joined in by Tushar Agnihotri. He has over 16 years of experience in the telecom sector, held leadership positions in Tata Teleservices, Reliance Jio Infocom, and also other important companies such as Arvind Mills and Kotak India. So we are joined in by Tushar Agnihotri, the Chief Executive Officer for Route Mobile. Good afternoon, Tushar. It's always a pleasure to have you at NDTV Profit. Tushar, I was just looking at the Q4 numbers. Of course, last 18-24 months has been a bit difficult for the company. But now let's understand what has changed. What's the outlook looking like for FY27, and also the industry specific, you know, a little bit of overhang was there, especially on the low value business, which your strategy is to reduce it. What is the timeline looking like?
Good afternoon, Sharath. Thank you for having me. Sharath, the outlook for FY27 is a mid to high single-digit growth on the revenue. We're expecting roughly an exit at 12% EBITDA. Yes, I mean, there are headwinds. We've spoken about that earlier, but we seem to be at the fag end of those headwinds. The new product revenue is sticking in. We see some decent growth over there. And of course, with the acquisition of Proximus Global, we have some interesting offerings which we're bringing to the Indian market. And we're fairly hopeful that they will create new revenue streams for us. These are interesting solutions. These are something which is not experienced by the Indian market before. And we're fairly hopeful that with the adoption of those solutions, we'll see a fresh energy in our numbers and our bottom lines. As far as the certain low-hanging businesses, I mean, we even are hopeful of some good opportunities coming our ways, and revenues will be on an upswing with them as well.
Right, Tushar, that means like the worst seems over. But I just want to understand a little bit of industry perspective also. You know, the entire CPaaS budget cuts is something which, the brokerages also flagged off because there's a macro tightening also at play. How do you see this happening in the industry right now? You're just having a chat with your clients. What do you think over here?
I don't think, Sharad, there's a budget cut happening. Budget reallocation is happening, perhaps, where other channels are being adopted. Any progressive company, customer-facing company, would like to adopt new technologies, and perhaps the shift is happening from SMS towards other OTT channels. Now we're fairly equipped over there. We are working with all those OTTs, and we're bringing those solutions with our value-added intelligence layer to them, and we're fairly hopeful that we will get a fairly decent pie of that business as well, which will keep us in a fairly strong position, or not only in terms of what kind of value we'll bring to them, and also in terms of the revenues we create and key for Route Mobile.
Right, and Tushar, what are the AI use cases happening for a CPaaS player? Because at times we think that larger AI players might put in more pressure on SaaS and CPaaS. On the other hand, you become a system integrator, it becomes more beneficial for you. So how is this AI playing out? And if you can quantify it, by when we can start seeing the benefits of Route Mobile coming in the AI space?
Okay, so let me just give you some brief on exactly how AI is impacting CPaaS. One, it's fairly in a very fairly progressive manner, in a manner that we can bring better solutions to the enterprises. AI has layered CPaaS with some intelligence. Earlier, if you look at CPaaS, it was used as pipes to send comms to the end users of any brand. Now, with this coming in, you see there's some interesting use cases coming up. If I have to give you some insights, you can now hyper-personalize your comms to the end users. So any brand, while targeting, can identify which channel, I spoke about multiple channels which are coming in play now, which channel which evinces the right reaction from the end user. What time of the day do I need to send a comm to ensure that I get a favorable response from the end user? You can do sentiment analysis. You can look for if a certain statement is made either over a voice interaction or even over a text interaction. You can identify exactly where the user is heading. If you see that the user is kind of losing interest.
Tushar, that's a pretty interesting take on that. But I wanted to understand, from the shareholder perspective, any kind of, cross-selling synergies with the Proximus Group is something we can have, because you have globally a lot of other companies also in your portfolio. So is there any chance of cross-selling or a synergy?
So our group company, Telesign, has very interesting intelligence and fraud prevention offerings. We were, of course, packaging in the way that we can address the relevant markets. There's something very interesting we're working on, which will bring some degree of benefits to not only banking but many other sectors. So we were hopeful of going live with them very soon. This will bring in, as I mentioned earlier, bring in new revenues to us. This is something which is acutely required for the banking and the other domestic verticals. I am fairly sure that that is something which enterprise will relate with. They will address some pain areas of these enterprises, and in turn, of course, bring value to us.
Tushar, one more question is on the cash balance. I'm of course a company of your size. There is a decent cash balance also. Is there any way to reward shareholders? Because of course the stock hasn't done much over the last 3 to 4 years. But any reward for the shareholders, or are you keeping that money for some kind of an merger acquisition?
So the approach is both ways. Of course, we plan to reward our shareholders by giving out higher dividends this year. We're targeting 16.5 as compared to what we were doing of roughly 11 year on year. So that's one target. And of course, we'll have to ensure that we keep delivering what we have promised to the market, promised to the stakeholders. That's one, of course. Alongside, we're looking at we have some targets. We're working on some acquisition possibilities, which will enhance our offerings of our platform, and in turn keep building value for our shareholders and stakeholders.
Thanks a lot, Tushar, for your views on the company, and it's good that you have cleared a lot of doubts which were there from the stakeholders, and that's what we get managements like yours to clear that in KYC. It's always a pleasure to have you, Tushar, with us, and best of luck for the future. May you get all your guidances for the future. So that's the interesting take coming in from the management of Route Mobile. Of course, there was a pressure in the industry, but now it seems like the management stating that the worst is over. But yes, we need to understand how the progress actually maps up going ahead as well. For interesting stories like this, stay tuned to NDTV Profit, and yes, keep watching KYC.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea when will it end, every day you get hopes and the next day the hopes are dashed.
there is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. The most recent headlines have to do with certain restrictions that mutual funds are putting in place for gold investments. And okay, you need to read beyond the headline, because actually, despite those restrictions, it's still not too much of a bother for you as an individual investor. But why are these restrictions coming into play? There are already restrictions in place on international investing through the mutual fund route, both in mutual funds as well as in ETFs. So we're talking about the implications for your diversification, and we're talking about your portfolio strategy as well. That's really going to be the big focus on today's episode. I'm joined today by Mohit Gang, who's the co-founder and chief executive officer of Moneyfront, as well as Santosh Joseph, the founder of Germinate Investor Services. Gentlemen, thanks so much for taking the time. Just to get the latest update out of the way, there are a few restrictions that have come through. Nippon India has restricted large investments in gold, and this follows through on a couple of others that have already place those restrictions, right? So HDFC Mutual Fund and ICICI Prudential Mutual Fund. But these are large investments, right? They don't have to do with the smaller retail investments. Correct me if I'm wrong. How do they work? Mohit, I'll come to you.
All right. Thank you, Alex, so much for having me on the show. Look, I think fact be told, India has imported almost 700 plus tons of gold last year. And though volume-wise, our imports are a little lesser than what we did a calendar year previous to that. But I think value-wise, it's grown tremendously, also owing to the prices of gold, which has risen dramatically last year, right? And again, I think there is no hiding from the fact that Indians are completely obsessed or fascinated with gold, and our appetite is ever growing. The ETF demand in gold honestly was around 15 odd tons last year, which perhaps would have grown last year, which perhaps would have grown to around 25 odd tons. It's not very significant compared to the overall demand or overall consumption of gold in India, but it is the segment which has risen the fastest by almost 75 odd % year on year, right? And there is a lot of social media, noise. There is a request from the Prime Minister of the country to kind of restrict some gold imports. And there is a lot of sensitivity around this entire concept of importing gold because obviously India is suffering from the energy crisis and current account deficit is ballooning by the day, and gold is our largest drag of the economy, right? So having said which, I think it's prudent that some of the AMCs have kind of restricted larger transactions. Will it really have a massive impact on ETF demand of the gold? I honestly doubt that. Perhaps that number can remain static this year because of these restrictions and might not go so much. There are no changes on the FOF limits, mind you. There are no changes for retail investors. I think the limit of 10 lakh per PAN per month also is a pretty decent and a wide limit for retail investors to go ahead and invest. So it's only on ETFs and 25 crore plus kind of ticket sizes where the restrictions then come into play. My sense is all other AMCs will follow suit. Right now, we have seen Nippon, HDFC, ICICI, the larger boys coming to the party. But I think this is one step towards kind of restricting the gold imports. But honestly, very little will move the needle on this part.
So, just to drive home that point, Santosh, it seems like obviously that this is a step in the direction to say, look, hey, we're not supporting very large purchases of gold ETF, right? What do those restrictions from the individual standpoint stand at right now? Because I'm reading stuff like 50,000 rupees per PAN, and this is actually you can effectively do a new SIP for every day of the month, and each of those can be 50,000 rupees. So it's not very large, right? The restrictions.
Yeah, so Alex, if you notice they're largely restrictions, and we read it with that caveat that it's only restriction. The ETF at about 25 crores is the big restriction for the people who are parking in. Now, let me also add why this is possibly the reason, apart from all the points that Mohit added. We've now taken a great convenient tool to invest in gold digitally through the ETF route. Now, over the last year or so, gold has done phenomenally well, and there's also a need for diversification. Therefore, we're adding gold into the portfolio. I think this restriction comes in for these large bulk purchases. Now, when it comes to retail, whether it's 10 lakhs per month or 50,000 per PAN per day, this can easily be managed for an investor seeking to diversify through a staggering method or through starting up a new systematic investment plan or any other method. So largely the word is restriction only. It doesn't stop you from investing. And currently we have 3 guys. That means the rest of the guys can buy it. The rest of the funds which are offering can easily be bought into, and there's no restriction over there. So if someone is really in a tearing hurry to say that I want to buy gold, there's actually no restriction. The restriction is only by the 3 companies for the moment.
Yeah, okay, that's fair. Just to make Mohit's point clearer, right? In January 2026, you had inflows of over 24,000 crore rupees in 1 month in just gold ETFs, and thousands of crores beyond that into silver ETFs as well. And you know what happened to gold and silver after that. So you're still seeing inflows of 3,000 to 5,000 crore rupees on a monthly basis. We'll see what the latest data is in a couple of days or in a day or two. But I do want to ask Mohit, of course, you've also said that you can continue to invest in these ETFs. What other options are available for digital investments into gold?
Okay, Alex, so look, now that SGB is no longer an instrument or a vehicle which is available, you have digital gold, which is the only digitized option available, honestly. But a caveat being told here is that SEBI doesn't kind of support digital gold sales. Because there is no physical verification of the stock which is backing up your digital purchase, right? In case of an ETF, every single purchase is backed by a physical verified stock, verified by SEBI, and there are proper trust mechanisms responsible for, and there are proper guardrails established to kind of have it all overboard, right? So in case of digital gold, these are private companies. There is no physical verification. And SEBI has also warned against these purchases time in and time out again. Having said which, these are fairly easily available over digital sites, and there are a few platforms.
And there are also EGRs, right? Electronic gold receipts, which the NSE has recently launched.
Yes, there are, but I don't think so. These are very popular instruments as of now, Alex. This has just been launched, and I think the popularity is yet to pick up. And I haven't in recent times seen a lot of interest in those actually.
Okay, so so that was the first part of this, and just to clarify the idea that there are restrictions, and frankly from the individual perspective, as we've established, it's not really very significant and not something to worry about. I do want to talk about diversification though, because one part of diversification is investing in gold and commodities, and it is also from the equity standpoint investing in global assets. Both of those will help you curtail the impact of a depreciation in the currency. So let's talk about first, why is diversification important? How do you define diversification? And then we'll go into a few details on what you can do right now. Santosh, from your perspective, when you speak to clients, what is the way in which you describe diversification? How does it work?
Alex, the most simplest way that we explain diversification even today is the very old adage: don't put all your eggs in one basket. What do we mean by that? Is that you're storing something precious. Don't put everything in one place. That if there's ever a damage or a hit on the basket, you don't lose all the commodities that you stored in. Similarly, when it comes to investing, we believe that the benefit for the investor is to diversify, to put your money or investments into multiple assets which perform differently over different points of time. So that even momentarily, if one asset goes through turbulent times, your overall portfolio is limited impacted, which is your overall portfolio doesn't go down at the same time. Now, the concept of portfolio diversification is actually now time tested, that number one, it reduces risk. Number two, if done well, it helps you also optimize return. So on one hand, you don't only go with the notion of saying that I'll save money or protect money, but also adding another asset can not only help you reduce risk, but also increase return. And therefore, the risk return becomes extremely beneficial to the investor the moment you start diversifying. That is, don't put all your money, all your investments in just one or two assets.
Got it. Mohit, you want to add to that and also define what under diversification and over diversification could be? Because ultimately, this is a spectrum.
Okay, look, so first, I think in terms of diversification, diversification obviously is of multiple types and varieties, Alex. Look, one is a very broad-based contour of diversification, which is diversifying across asset classes. The simplistic way or the textbook way of doing it, which is you have risk assets, which is equities, you have fixed income, you have real estate, you have commodities, you have a full basket of diversified assets, because these are negatively correlated. They don't typically work in tandem. And one quick health check on diversification is everything in your portfolio is working well, then it's not a diversified portfolio. There has to be elements in your portfolio which aren't working well, right? But that's very simplistic. The second take on diversification is a style diversification. And Alex, you and I have spoken about it multiple times, which is having a value-based portfolio, a growth style portfolio, and perhaps some shades of quality, momentum, low vol, etc., right? So that's a style-based diversification. Third is a geographical diversification, which is you going out beyond the shores of your home country and trying and investing into international markets. For Indian investors, absolutely relevant, because you are just 3.5-4% of global market cap, and there is a wide, vast ocean outside which we haven't explored. right? So that's one form. Then there is a size-based diversification, which is obviously perhaps a subclass of equities, which is your mid caps, small caps, so on and so forth, right? So there are these multiple layers of diversification which one might want to use and implement in one's portfolio.
Interesting. I do want to ask about that last one first, which is the geographical diversification. And it has become a big talking point, particularly because of the underperformance of the Indian equity market over the last 2 years and the outperformance of various other markets. Whether you look at the US market or you look at the Japanese equity market, you look at the South Korean market, you look at the Taiwanese market, in the latter two, you're talking about 3 stocks effectively that have been the reason why these markets have done incredibly well, and they are AI or chip related stocks, right? But Mohit, question to you, which is that for most Indians, they are invested primarily in the Indian equity market. Let's face it. What are the drawbacks of that? Because I've also heard people saying, look, if you're investing only in the Indian market, you're losing purchasing power. But isn't that a wrong argument? Because if I'm earning in rupee, I'm spending in rupee, I'm also earning returns in rupee. How am I losing purchasing power if I'm not investing globally?
Okay, Alex, I think that's a very, very interesting question and a pretty large debate. Honestly, very difficult to crunch it out. Look, I think if you're not investing internationally, you are losing a vast ocean of possibilities in terms of diversifying into global assets which are not available in India. There are many themes which are not available in India, right? Your currency is depreciating almost 3.5% for last 20, 30 odd years put together. 1 or 2 years have been extremely brutal on the currency. So you are losing that much more additional returns which you could have gained by investing into international market. Now you're very right when you say that if I'm not bothered, if I have nothing to do with the world at large and I'm just an Indian earner, why should I be bothered? One way of looking at it is not, yes, you're fine if you're not bothered and will be no linkage, there are no comparisons for you to be drawn with the global portfolio and everything, and you can very well live in the cocoon, beat Indian inflation and keep having Indian returns. That's not a bad way of looking at the picture. The second way of looking at the picture is the inflation in India is predominantly an imported inflation. We are a large importer of oil and gold, and both these are huge contributors of inflation in India. Right, so predominantly the inflation is an imported inflation. So in effect, you're trying to beat global imported inflation. There is a lot of imported variety in us. We are doing foreign travel. We are also moving out. We want our children to go abroad and study in many cases. Right, so there are linkages, even though we deny it, but there are very strong global linkages. And for you to be a truly diversified global portfolio, I think one has to look at international diversification. Having said which, Alex, the argument still remains, and it's a larger discussion. As I said, that if you want to be a satisfied person within your own pond, you can very well be.
Yeah, particularly, see, I'm not necessarily saying this with any nationalistic fervor or anything else, right? I'm simply saying it because the last, you just look at this century, you have the fastest growing economy, large economy in the world, and you have a situation where there has been an underperformance, but eventually that underperformance will reverse. You will have a reversion to mean. That is my argument, and the simplicity of investing in the Indian equity markets through mutual funds is where I'm getting at. Santosh, you want to add to this point?
Yes, it's natural, Alex, to think that India is enough for us because it's a domestic market, it's a local market. We tend to understand and psychologically feel a lot more confident to be within the domestic market. But I think I'll take a point from what Mohit said, that being negatively correlated and all your funds, if they're performing well, you're possibly doing something wrong, is where this global diversification comes into place, especially the last 2 years when India has been muted, where globally stuff is on fire. This is when it adds value to the portfolio without, being too worried about why should I look at outside India, where the opportunity is incredibly big, over 96-97% of the opportunity is big. So this is where diversification will help you. Don't need to be worried about nationalistic or we're gaining or losing purchasing power, but it definitely helps your portfolio do better.
Got it. Okay, so how do you do that is the question then. So because ultimately, and two specific questions, right, guys? which is, and Mohit, I'll come to you first. If I'm looking at my equity allocation, and if I'm looking at that and fixed income and gold at this juncture, first of all, the tendency is to have too much allocation towards real estate. We won't get into that. But if you are managing your allocation right now, how should you manage gold incrementally? One. Two, how should you manage your international equity, in your opinion? Should you go through LRS and do an index-based or ETF-based approach? Two, and then we'll get into the domestic portfolio at the end. But first, the first two questions.
Okay, I'll answer the last part first, Alex, which is how do you go about doing your international investing? Now, I think we are all aware that the domestic mutual fund route of investing abroad or in overseas funds is pretty much closed. Almost all the fund houses have restricted their limits. There are very marginal SIPs allowed. If you are already having an existing SIP, perhaps you are lucky enough to continue it. But in terms of setting up newer SIPs, the amounts are pretty negligible or very, very small across few names here and there. So that route is pretty much closed, right? The second option which is available and which is the most legible and easily doable option is the Gift City route, which is the new boy on the street, but it's growing rapidly, making rapid strides through LRS, which is liberalized remittance schemes. The government of India allows every Indian citizen to remit 250,000 USD every financial year, no questions asked. You can use that limit per person to invest into any international market. When you invest above 10,000 USD in a financial year, there is a TCS implication. But through Gift City, there are multiple options available, both in retail and non-retail format. What do I mean by that? A non-retail format, which is the most prevalent format, is where the minimum ticket size is 150,000 USD per instrument. So you'll have to do at least that much LRS, which is not everyone's cup of tea. There are few retail options also available, which is starting from $5,000 and upwards. So which means approx a 5 lakh kind of a ticket size. So that's where perhaps you can start your global investments. But if you're really asking, is there an investment option available like an SIP of 20,000, 50,000 rupees a month LRS? No, that is not available. Then the only third option available to you is international investing platforms like IBKR or ViewTrade and etc. So these are all global trading platforms which give you access to global markets through LRS route. But there could be tax complications and other things. So one has to be really cognizant of using these platforms. So that's the second part. And the first part, Alex, do you want me to answer in terms of...
Yeah, please.
Okay, which I think was the
incremental changes, allocations right now.
Incremental allocation on gold and everything, right? Okay, look, honestly, our view always has been static that in terms of commodity allocation, one can vary between 10 to 20% of the portfolio. Given the new dimensions of the world which is forging for us, the geopolitical things and everything, I would tend towards the higher end of this spectrum, which is 20% allocation to commodities at all points in time, predominantly which will be gold, and there could be silver here and there, but more like a tactical allocation in terms that the gold silver ratio is really giving you an entry point. But gold minimum 10% can go up to 20% in your portfolio.
Okay, interesting. Gold, by the way, is also a hedge against rupee depreciation. Just in case you were wondering about that, if you buy an ETF and you map it over the course of the last 2 decades, you will actually notice that there is a bit of a kicker that you will get because of the rupee depreciation as well, because we're a price taker in the price of gold. Santosh, you want to add to that and maybe also comment on diversification when it comes to domestic equity as things stand right now, because you've seen pretty much across the board underperformance, relatively speaking, though one can argue that the broader markets are actually doing better.
Yeah, so just a note on the point of gold. For the last decade or so, we've benefited as a country almost 30-40% extra return at a 10-year basis, only on the depreciation of the rupee. So it's a great advantage. Second thing that I notice when I meet people and I encounter newer clients is that most of them haven't yet allocated gold and silver in the traditional investment sense. That is, they do not have it as a part of the portfolio allocation. So going forward, we'll increasingly see that bit of gold demand working, where people will start allocating the ETF route, gold and silver, into the portfolios. And by and large, the 10-15% exposure is good. Now, coming to our domestic equities, yes, we've been through a rather difficult, turbulent time for the last 18 months. But, there comes a point where you look at the the turbulence and say, you know what, this is not new. We've been through it. We've been through extended time periods of both price correction and time correction, especially for the present market scenario right now, where we've seen this is one of the longest periods of extension, the post-COVID world that we're living in. So for most investors watching out there, it may be a very rough period to go through, but we still got to stick in, be disciplined with that equity allocation.
Okay. Mohit, specifically though, if you're talking about incrementally shifting things around, because now might just be a good time to do that, what would you suggest in terms of style, in terms of ensuring that you're adequately diversified?
Okay, Alex, look, I think we've always believed that one has to have latitudes of market cap allocations in a portfolio, which is your large, mid, small, right? So, and those latitudes could be at, let's say, large could be at around 40% of the portfolio, mid, small could be 30% of the portfolio, and then other portion could be thematic or tactical plays, right? And then also these latitudes have to be vertically cut through longitudes, which would be your style-based longitudes. So you would have at least 40 to 50% of your portfolio into a growth style portfolio, 20% into value, and the remaining split into momentum, quality, and low vol, depending on the nature and tolerance of every investor. But yeah, I think these latitudes and longitudes are must to have a fully diversified portfolio.
All right, gentlemen, on that note, thanks so much for taking the time. Pleasure speaking with you as always.
Thank you so much.
All right, well, so you've heard the long and short of it, which is that when you're looking at gold investments, they're restricted, but for the most part, that's not meant for you. That's meant for very large investors. And when it comes to allocating from this point on, bear in mind that diversification is the most important thing, incrementally as well. It doesn't make sense to run after the flavor of the season. And it could well be argued that international investing has become kind of like the flavor of the season. We're talking about the SpaceX IPO, which everyone is curious about. We're talking about certain other markets which may have gone through a little bit of a lull, particularly at the start of this particular week. But you've got a sense of how to manage things, and let us know what you'd like to hear about on this particular program. In the meanwhile, stay tuned. This is NDTV Profit.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. Call 9300 This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
we'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Welcome to this very special program where I'm speaking today with Sameer Kumar, Country Manager at Amazon India. Now, it's been about a year since Sameer came back to India and took charge of the company's Indian operations. We spoke last year, Sameer, and we're speaking again when the company finishes 13 years in India. So a double milestone in that sense. A lot of action taking place in the last 1 year, isn't it?
Yeah, thank you for having me, Tamanna. Yeah, it's been an exciting time. It's been almost 18 months for me here, and we completed 13 years in India. It's been an exciting journey. We have made great stride, and we have grown with the India story. But it's a pleasure to serve the Indian consumers and build for India. So we've been really excited about what we have done and continue to do in India.
You know, just to share this insight with you, Sameer, I was speaking recently to a high-level executive in the quick commerce space, and as one does, I was asking, so what's happening in your space, so much competition, etc. What do you think about Amazon and Amazon now? And his answer was, still some time ago, we weren't really looking at it seriously because even though Amazon is large, it wasn't moving fast in that direction. Now that they seem to have got their ducks in a row, we have to really watch and see what they do. Does that, from a potential competitor, does that sum up what's happening in a sense that Amazon has finally arrived at the quick commerce party?
I think I would not focus as much on competition. We always focus on our customers. And what we have spent so far is spend time building the right offering for our customers and get to the next 100 cities and 1,000 micro fulfillment centers. We have tried to enable the widest assortment, the safest possible operation, and at the same time, do it with the safest fulfillment centers or the micro fulfillment center that we have set up. We believe that in the near future, we will have the largest selection or the widest selection at the fastest speed for all our customers around the country. And if we do that, there's no reason why we shouldn't be winning the speed game while we continue to win on the selection as well as the value game. And that's what we are here for. So I do believe that we have the momentum and we really like what we have built so far. Our business is growing 25% month over month. And prime customers, which is our big differentiator, are shopping 3 times more frequently with us. So it's really exciting to see what we have built. But as we say, we are still in day one of our journey in India. And we remain excited about what's coming.
Yeah, no doubt about it. And this is something that Andy Jassy also said in the Q1 numbers. He spent some time talking about Amazon Now and about Prime. Quite exciting. But I have to ask, Amazon's been in India 13 years, global giant, right to win, some would say. First mover advantage. So I reiterate my question and forget about the competitors here. It's my question. Why so late to the party? The quick commerce fight was here. The battle was here to win long before the other people came on board.
I think it's not about being late to the party. We are in the party and we are here to win. And as we said, it's still day one for e-commerce or online commerce around the world. E-commerce penetration around the world is less than 10-15%. In India, it's about 10-15%. So even for the speed offering of minutes delivery, it's early days. We have, and there's room for growth as we are seeing with our prime customers. They're liking what we have built. So I don't believe we are late. We have started our journey and we love what we are building. And we remain excited about what we're going to deliver for our customers in the coming months and years.
Yeah, when we hear and see in the media and an Indian company saying that we can outspend Amazon if you need to, and there's a published quote in the papers, there are 2 thoughts come to mind. One is how India has, in a sense, become the hotspot for this model of e-commerce delivery. And second, how the market is large enough to give space for an Amazon as well as local players to exist. How do you look at the landscape?
I think, first of all, you're right about the last point that commerce or online commerce is going to be a very large segment and there's place for multiple players. We focus on our business and we'll continue to build what is right for the Indian consumer. We have always prided ourselves on having the fastest speed, and we'll go ahead and do the same thing for our minutes delivery offering and make sure our prime customers get disproportionate value out of that. So that's something we're going to continue to invest in. In terms of what we're going to do, and it's very inspiring to see how this has evolved in India. And in fact, what we have done in India with Amazon Now, we have taken it globally as well. So Andy and the entire senior leadership in Amazon is very excited about what we are doing in India and how we can take this, whatever we have built in India, to the US. In fact, in US, we have launched this service in multiple cities. We have it in UK, Japan. In Middle East, we have launched it in United Arab Emirates, Saudi Arabia, and Egypt. We are taking it to Latin America with Mexico and Brazil. So we remain excited about what we are building here, and we won't be left behind on our speed offering. Maybe we're slow to start because we are trying to figure out how to build it in the right way. And we also expand in a way which is very deliberate, and we focus on making sure we have all the safety requirements that are fulfilled. We have all the licensing for our stores done, and we expand in a way that serves our customer base the best.
Is there a question at all on cash burn, profitability, those metrics? Because this entire space is also looked at from that lens. And of course, for listed players in the Indian markets, it's a whole different ballgame, right? Average order value, gross order value. I'm just curious to know how you are approaching it right now.
I think we have always taken, for us, it's never been an either or. It's not growth or profitability. It's growth and profitability. So we have always taken that approach. In the current scenario, as we are scaling up our business, are we investing in India to build the speed offering? Absolutely. But do we keep track of all the profitability markers that we need to achieve? That also we are doing. Our startup team that's building this product and services, they are focused on execution. But as a leadership team, we look at it and say, as we build the business, as we scale our business, are we hitting those profitability markers? And to be very honest, for our first set of stores, we are very happy with the performance that we are delivering. And overall, as an Amazon India business, we are hitting our profitability markers as well. So it's never been one or the other. It's the both, and we are delivering on both.
Can I delve a little bit into that last point when you say that as a business, Amazon India is hitting its profitability markers? Because that's a bit of a hard goal to reach in a business which is still in a space which is still establishing itself. I'm still talking about quick commerce here. How are you doing it, and what color can you add in terms of any kind of details of those profitability markers?
I think, like, as you look at it, this business at retailing or e-commerce is a business of scale. As we scale our business, we get a lot of leverage. If you look at our flywheel, we lower the cost as we get scale. And so our goal is to first grow the business and become large, especially in this speed offering. As we improve our order density, as we get to more customers who are shopping with us, we improve frequency, as we called out, as we add more assortment, the average order value goes up. All of that will help us accomplish that, and we keep track of that, and we are happy with the progress that we make.
What is the strategy here? Is it more speed, or is it more size of inventory as far as this part of the business is concerned? Do you want to go wider, or do you want to go deeper?
I think, why do I have to pick one or the other? It's not an either or in this case either. Like, we want to offer the widest selection at the fastest possible speed, and that will be a differentiator for Amazon. We have always prided. Selection across speed has always been our offering. So when we offer minutes delivery, we're going to offer that too, with the widest selection that's possible in those micro fulfillment centers. And then we'll take it to the hour and the day delivery. And all of that will be available to you. Like, as a customer, if you're making your last minute purchase or you forgot a gift to buy, you can buy that on Amazon now. But if you're planning a party at your home for the kids that are coming for a birthday, we'll have all the assortment that's from party supplies to balloon to utensils and all the other things that you need, including the return gift for your kid. We'll have it for 50 people that comes to that party, and that will be only available at Amazon. So selection across speed is our game. And even in our fastest delivery format, which is the minutes delivery, we'll have the largest assortment.
Yeah. How does that then tweak the way you define yourself? Are you now more than just marketplace from a consumer's perspective?
Sorry, can you repeat that question?
Are you now just more than marketplace? Right? Because a lot of this will require some inventory creation at your end, whatever your version of dark stores or fulfillment centers. And Amazon, for a long time, for the Indian consumer, has been a marketplace as well. So how do you tweak your outlook to where your business is moving now?
We still remain a marketplace. We have a thriving set of sellers who continue to operate with us. Even in our offering for minutes delivery, which is our Amazon Now offering, it remains a marketplace, and we continue to operate as a marketplace with a set of sellers who are putting their inventory into our micro fulfillment center. Is it a bit challenging? Yes, because to do business in this micro fulfillment center, they have to register there. But we are overcoming those barriers, and we have for 13 years we have operated as a marketplace. We continue to operate as a marketplace, and the now offering is just our speed improvement, where we are offering a subset of our assortment or the selection in minutes to the same set of customers.
Okay, so it is, I suppose, a wider approach than some of the stage then. Right now, Amazon Now, Minutes is new and exciting, Prime is exciting. As you look at over the next 12 to 18 months, Samir, what is seizing your interest, apart from, of course, wanting to see all of these current projects through successfully?
I think it's continued to be the same. We want to offer the widest selection at the best possible value and the fastest speed. That continues to be our game that we'll play. Along with that, we'll continue to augment our Prime offering. We are also working on our low value selection, getting our penetration further into smaller cities. We have just announced investment of 2,800 crores rupees in our operations to expand our operations in set of cities. We are building fulfillment centers in tier 2, tier 3 cities. 70% of our Prime customers, new Prime customers, are coming from these smaller cities. So we're going to invest in Bharat more than India as well. So we're going to continue to do both. In terms of other investment, we're going to be big focus on AI, as we are going to improve our shopping experience and our selling experience, because our sellers will it'll make it easier for them to sell on Amazon. We're going to make it easier for customers to buy on Amazon. And we're going to continue to invest in our tools and services to make sure sellers around the country can also sell globally with us. So all of those are very exciting for us. As we said, we have enabled $20 billion of exports already. We're going to take it to $80 billion of exports in the coming 5 years. We have invested $40 billion in India already between 2010 and 2024. We're going to take it to another $35 billion over the next 5 years. So we're going to commit to $75 billion of investment in India.
Why, why is India at that focus right now, Samir? And I want to ask you a broader perspective. From Amazon's focus, where does India stand in terms of a market size, even an export platform for the rest of the world? For the longest time, India has been that story which is growing. Do you think that we've reached, after 13 years, from Amazon's perspective, that tipping point on where India is beginning to matter at the global table as well?
I think it continues to be, as we said, it is still a day one for us in India as well. We are very long-term focused. As Jeff called out a few years back, 21st century is India's century. And we believe in that. Our leadership believes in that. So we continue to remain invested in India. And that's why we have pledged another $35 billion in the coming 5 years. So it remains an important locale or marketplace for us, along with our investment in AI and data centers. So India is an important place for us and will continue to be important in the coming days and years.
You talked about AI. I just want to understand what that means for all the cohorts, right? For your sellers, for your customers, for your own business operations in India. Let me tackle that AI bit in a little detail from all of those aspects. Let me start from the amount of people you hire or the employment that comes into India. You talked about a 2,800 crore rupee investment. In the Indian context, that's also looked at in the number of jobs you create. Does that go down? Does Amazon India need to streamline the employee heads within the geography, as Amazon has had to do the world over because of changing technology?
I think, like as we looked at, we have already created over 2 million jobs, 2.4 million jobs in India. And we have pledged to create another million jobs in India. So over the next 5 years. So we do want to do things that are good for India. As we have done in the past as well, we continue to grow our teams in India. If you come to Bangalore and see, like, we are growing our campuses both on the other side of the town and where we have Amazon India businesses. So yes, we are going to continue to invest in our people and continue to grow our business in India. Along with that, like, AI is going to be a big enabler for us in terms of taking us to the next level. I always call out that AI in India, especially for Bharat, will make things possible. Whereas for India, it will make things better. So I think I'm really excited about what AI brings in the future for us.
But let me come back to that specific question, Samir. You talked about the jobs you've already created in India, that Amazon has already created in India. But in terms of additional headcount, do you see that number growing at the same pace, reducing, or staying the same with AI in the picture? Because if there is one company that can utilize AI to streamline operations very effectively and has displayed the ability to do that, it's Amazon. It's but obvious that that will flow into your India operations as well.
But it also makes things possible for us that were not possible. If you look at the list of things that we do, there's always things that we regret that, hey, we cannot do X, Y, Z this year. I believe that it will unleash the next set of innovation in India. So I think we'll become a lot more of owning our systems and tools. There'll be a lot more agents that will work for us. But at the same time, like as Amazon India or teams in India, by the way, we have a lot of teams in India that support our global business. They will continue to thrive and do a lot more. So I remain excited about the future. I'm very optimistic about what we do. I cannot comment on our plans or what headcount we'll have or not have. But at the same time, I remain excited about we'll do a lot more in India and we'll continue to build our teams and grow our businesses in India.
Samir, I understand that. Okay, don't give me a number. I'm just trying to get a sense. Will you have to reduce headcount in India? There are already some headcounts and some layoffs that have taken place in line with what's happening globally. Will that continue? Will it stay the same?
I think when you talk about our global headcount, what we have done is not headcount reduction. It's like basically we had to get our culture back, and it was more around reducing layers and getting closer to our customers. We believe that we had certain unnecessary layers that we have created. So we are streamlining our operations, but there was not a headcount reduction. But at the same time, I cannot speculate on the future, but I believe AI is very transformational and it will help us do a lot more things. And I remain excited about the possibility of what AI will deliver for Amazon and for India.
Okay, now that's from the employee perspective or the corporate perspective. What about for sellers and customers? What really changes? What is the innovation in terms of AI in the e-commerce space that we'll see out of Amazon that Indians have not seen yet?
I think we are already starting on that journey. Like if you look at, as I said, AI for India will make things better. AI for Bharat will make things possible. So when you look at a seller story, like it makes a seller sell her product around the globe while sitting in Gujarat. Like there is a seller in Gujarat who is selling her dolls, and previously you had to go through a UPC, EAN code, create her listing, which was challenging. Now all she does is takes a picture on her smart device of the doll. The listing is created automatically using a seller assistant. We have built assistant for listing the product in India, so she's selling in India. Next, the whole listing gets localized in Amazon France, Amazon UK, Amazon Germany. So her product listing can go global in a matter of minutes because AI is able to help localize that product on us. We have built AI tools to basically help her bring that product into inventory in various locales, and we are helping in doing that as well. So we have one set of tools that are doing that. So sellers are able to sit in a corner of India where it was not possible in the past to be able to sell globally. They can do that sitting in their home with a smart device. And that's what makes it possible. So our seller assistant tool is there. When it comes to customers, like a customer in tier 2, tier 3 city who doesn't speak English, able to shop in their local language, that's what our Rufus agent will hopefully do in the near future. Our voice assistant will help them there. If you look at what we have been enabling with Lens AI in terms of taking a picture and figuring out what product it is. So you can shop using a smart device and take a picture and get the product around that. the review summary that we have launched, it's all AI based. So I think customer experiences are going to transform as well in the coming days, weeks, and months and years. And we are really excited about all those changes that are happening, and really looking forward to the future with AI.
You know, it's going to be an exciting space to watch, no doubt. And we've spent quite a lot of time talking about quick commerce because that is really the next leg where we see Amazon's might in a space where there are a lot of other players. Looking forward to seeing that journey and more. Samir, thank you for your time and for sitting down with us today.
Thank you for having me, Tamanna. As we say, remains day one, and we are here to win it. So thank you for having me here.
Yeah, I hope we can catch up sooner again and get an update on what's happening with Amazon in India.
Sure, anytime. Like, I think if I'm in Delhi or come over to Bangalore, we'll meet again. Thanks, Tamanna.
100%. Thank you so much, Samir. Great chatting with you.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. Call 9300 This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
Hello and welcome to The Big Question. I'm Vikram Oza, and this evening we're asking a question that really goes to the heart of India's future growth story. The question is India's demographic dividend slowly beginning to fade? And here's why we're asking this. For the first time ever, India's fertility rate has fallen. It's gone below the replacement level. Now, what is the replacement level? Let me explain that, what it means. Put simply, replacement level is the number of children that are required for one generation to replace itself without the population shrinking over a period of time. Globally and in India as well, that number is estimated at 2.1 children per woman. India is now at 1.9. That's the big figure that you're looking at, and that's where the drop is. That has triggered a larger debate. And this has happened essentially after Elon Musk, he flagged the trend online. He's warning that falling birth rates could eventually create economic and demographic challenges. Now remember, this is still the world's most populous country that we are talking about. That has been our enduring story. That population is more than 1.46 billion, and nearly 68% of Indians are in the working age bracket today. But demographers are saying that the concern is about what happens 2 or 3 decades from this point onwards, when fewer young people could mean a smaller workforce, rising aging-related healthcare costs, pressure on pensions, and possibly slower economic growth. But there is another side to that story as well. Falling fertility is often seen as a sign of progress, higher education levels. You could be talking about growing urbanization, women entering the workforce, later marriages also taking place, and changing aspirations of an entire generation. So the real question is this: are Indians choosing to have fewer children, or is the rising cost of housing, of healthcare, of childcare, education, all of these, are they making parenthood increasingly unaffordable? And importantly, India is not uniform. You're seeing several states have this variance. So Bihar, for example, you're seeing that fertility rate is still at 2.9. Delhi, of course, is just 1.2. Urban India is seeing far sharper declines than what we are seeing in rural India. So interestingly, the debate is happening at a time when India is conducting its first census in 16 years. That's ongoing. It's a massive demographic exercise that's going to give policymakers the clearest picture yet of how India's population, how our workforce, how aging patterns and social realities of our country are changing. So it's going to be an important piece to watch. But tonight on The Big Question, our question is about the demographic dividend and whether or not it's at risk considering our falling fertility rate, because it goes even further than that. Whether we are able to create an economic and social condition in our country that makes having children that much easier, that much more affordable. Let's take that debate to our panel, and joining us tonight, we've got an excellent panel waiting to debate this. Economist Professor Rajendra Upadhyay is with us. He's from IIT Delhi, the Indian Institute of Technology. He gets us the long-term economic implications. He's joined by Anil Chaudhary, National President of the Jansankhya Samadhan Foundation. And to understand the medical and social perspective on changing family choices, Dr. Rachita is with us. Dr. Rachita Munjal is Director of Fertility and IVF at Cloud9 Hospital. And with them, we have Balasubramanian A. He's Senior Vice President at TeamLease. He tracks the labor markets and workforce trends. So welcome all. Good evening. And I urge you to raise your hand anytime you want to jump into the debate. But let me ask Professor Upadhyay, what's your take, sir? Elon Musk has been saying that declining fertility is one of the greatest threats to human civilization. In the past, of course, he's talked about aging societies like Japan and South Korea, but now he's talking about India, which is the world's most populous nation, and we do flaunt our demographic dividend. How much of a concern is our declining fertility rate? Do you agree with Elon Musk?
As you have already mentioned, that our demographic dividend is going to continue. And it's going to continue for several decades, at least 2-3 decades and so on. Now, this whole thing about fertility rate, 1.9, I mean, is lower than what we call 2.1% replacement rate. But its effects actually are seen only after 2 generations. So Indian population is going to increase, as the projections tell us, that from the current population level, we are going to have population of about 1.7 billion. And that may be in 2070, 80, whenever. So India is not really the country, I mean, which is facing this kind of severe population shrinkage problem. Of course, in the global situation, there are many regions, especially Eastern Europe, for example, where population is declining. and also some Western European countries like Italy, Greece, and so on, and then Japan, and even China. For 4 years now, population is declining. But our population in 2100 is projected to be double of China. So I don't see actually that any immediate concerns we should be caring about, we should be thinking about.
So not
because
an immediate
we have actually
problem.
regions in our country.
Not an immediate problem, Professor.
Yeah, 3-4 decades.
Correct. But for years, our biggest challenge here in India has been about population pressure. And suddenly the conversation is shifting to a decline in population, which is why it assumes that much more importance. Are we overreacting to one data point? Or you say this is genuinely a structural demographic turning point for India?
No, we are overreacting to this particular thing. And you have already mentioned, there are so many factors globally. I mean, with prosperity, with women's education, with women's participation, the fertility rate goes down.
Right.
But people talk about this demographic dividend, and this demographic dividend is also going to continue at least for 20 years in India. But our main problem is not able to provide job to youth. I mean, so what is the point of talking about demographic dividend? Demographic dividend already tells you that what is the ratio of working age population. So it's over 65%, 66, whatever, I mean, currently and so on. And it's going to remain high. Only in mid 40s is going to come down. So if we don't provide jobs to people, we have unemployment among the graduate students, which is highest actually. We have 25% youth population, which is called NEET.
Yes.
These people are neither in education, training or job or anything. And we have high rate of youth unemployment. So what is the point? The point should be to provide good education.
You need to provide good education. You need to have the jobs. Over the years, many worried about a population explosion. In fact, Prime Minister Modi himself warned of such a possibility in 2019 as well. In 2023, then India, of course, overtook China as the world's most populous nation. So Balasubramanian, just coming to you, today when we talk about India having nearly 68% of its population in the working age bracket, from an employment, from a labor market perspective, that you're hearing from the professor about as well. How important is this demographic advantage today to India's economic growth story? How is it placed? We seem to have a problem, Balasubramanian, with your audio. We're going to try and fix that very quickly if I can. But to understand why these earlier projections had expected India to reach below replacement fertility between 2030 and 2035. Now the country has achieved this milestone around 2020. So, Dr. Rachita, what do you think are the primary reasons for this that you would point out to be able to say why we've reached that milestone earlier, even though Professor is saying that, look, we are still on track, our demographic dividend stands, but jobs need to be created, but certain social factors have changed, haven't they?
So definitely, see, at population level, when we are understanding our demographics, it is different. On population level, we are thinking about low fertility era, decline in the total fertility rate. But if you ask me from a clinic level, there are millions of couples who are actually struggling to have one baby also. So the reasons we have seen many over last decade, the people who are approaching fertility clinics, IVF clinics, for the treatment has increased. This might be because of course, increased awareness towards this treatment, more accessibility of the treatments. But definitely there is a big change in overall lifestyles mainly. So people have delaying their marriages, there are delayed marriages and ultimately delayed child or family planning is there. Then of course your lifestyle, your diet, your exercise routine and all that also is affecting infertility or the fertility rate to a great extent. But most importantly, socially what we have seen is the urban population who is actually was initially when we started, if we understand from 15 years back, the main fertility issues were in urban population. But now even the rural population, people living in rural area are also facing fertility issues. So this might be because of the environment toxins, pollution factors, and lot of other factors which are really unnoticed. So as a clinician, as a fertility and IVF specialist, my idea is, or my concern is not to work only on the population, but it is about giving a liberty to couples to plan their child. So people are scared to have their child. Are we financially stable? Will we be able to bear the cost of having child or having a second child, which is a big question mark for a lot of couples living in urban population? Will we be able to afford our child? So balancing a modern era lifestyle with having children on time is the key here, and giving the couples liberty to have a child.
Correct. So that liberty is very important, that freedom to decide when to have children and how many. Yes, affordability is an issue, and we're talking about the pressures in the labor markets that Professor highlighted, and I was asking Balasubramanian about this as well before we realized there is a technical glitch in that audio. But Balasubramanian, now this urban fertility, which is now down to 1.5, cities are also struggling with rising living costs, like we're hearing from the good doctor. They're struggling. They're struggling with rising living costs. There is expensive housing also. There is intense work pressure as well. So these economic realities perhaps are making young Indians postpone or even avoid parenthood. Is that what you see happening right now? And how much pressure does this put on our labor market scenario?
Yeah, good evening and thanks so much for having me, and hope you can able to hear me clear now. I agree with what Professor said as well, that this is not really a situation that warrants us panicking. This is an important milestone, and this is more of an indication of a transition. It is not a crisis. Declining fertility rate is typically associated with rising incomes, urbanization, better education, healthcare, all of those things. And the stress of reducing fertility rate has been felt in many pockets of the country for the last couple of decades. This is not something new. It is just that the aggregate number has fallen below replacement levels for the first time at an India level. But like I said, in several urban pockets in the south specifically, we've seen this happening. Now, the kind of pressure it puts on the population is that while we will still continue growing because life expectancy is rising, and until about 2050s or even 2060s or 2060s, our population will continue growing. But the problem really is that there is a real and immediate threat of us as a country becoming old before we get rich. And that's the problem we need to address. And for that, we need to solve the problem of productivity. While we may be ranked 5 or ranked 4 in terms of overall GDP, if you look at the GDP per capita, which is a surefire indicator of productivity, we are languishing at rank 135 or beyond, in a denominator of about 200 countries or so. And the single biggest reason for that is the level of skilling, or the absence of which, or the lack of which, in our workforce. So a country of 1.4 billion people cannot really afford to have a talent shortage. It is not about just demographics, it is about employability. You can clearly see that many sectors are already witnessing workforce pressures: manufacturing, construction, logistics, hospitality, healthcare. The list just goes on and on. We are also entering a period where infra spending is going up, manufacturing is expanding, and global supply chains are creating new opportunities. So if skilling does not keep pace, then labor shortages could emerge despite a large population base. And another important aspect here is the under-penetration or the under-tapping of women in the workforce.
Yes.
While women participation in the workforce has gone up in the last 10 years or so, there is still a lot of headroom for growth over there as well, because it can have so many benign ripple effects. Two people work in a household, your disposable income goes up, your consumption goes up, and once again, the velocity kicks in and the GDP will go exponentially upwards as well.
But
So
Balasubramanian, they also talk
democracy
about lifestyle issues, right? When you have those double incomes, sometimes you just don't have the time to be able to raise your kids, and you don't have the kind of ecosystem to raise children as well. Like doctor is agreeing, I believe.
Yes. No, absolutely. The aspirational which is
The audio is still an issue. I'm going to try and ask my producers to fix that. But Anil Chaudhary, India's fertility decline, not so uniform as well. Women entering the workforce is an important piece, like Balasubramanian is pointing out. But what about the difference between the states? Bihar still at 2.9, Delhi still now at 1.2. Does that show India still has very different demographic realities that coexist?
Yeah, definitely. It coexists. And not only in terms of urban and, rural India, but in terms of different states, caste, creed, religious imbalance, there are many factors. And see, the demography of India is not as simple as we are talking. It's a very complicated issue. See, we have only 2.4% of the land of the world, whereas we have around 18% of the population of the world. So around, when we talk in terms of the population and the land ratio, we should have only 20 crores of the population in India. Or sometimes it may increase to 30 crores, 40 crores, 50 crores. And whereas we are 148 crores. So when we talk that, कि हम इससे हमारी TFR काफी घट रही है, total fertility rate is going down, हमारे पास संख्या नहीं बचेगी लोगों को काम करने के लिए, ये सब it's we can talk about Russia, different Western countries we can talk about that, but not in terms of India. इंडिया की पॉपुलेशन को काफी नीचे आना चाहिए अगर हमको सबको शिक्षा, रोजगार, सभी को सभी फैमिलीज को सभी को काम मुहैया कराना है. तो इतने हमारे पास संसाधनों की कमी है, रिसोर्सेज बहुत कम है, हमारी संख्या को और नीचे आना ही पड़ेगा. But this is also not a complete, you can say,
solution. You're saying that's not a complete solution either. But should fertility decisions, like doctors pointing out, should they remain entirely personal and market-driven? Or do you think we should actively encourage, you're saying that population is a problem and we should be restricting the numbers. But do you think it should come from policy side? Or do you think it should be entirely family decisions?
It can be a family decision, but it is, but it cannot be because southern states में और दूसरे states में काफी अंतर है. इसके अलावा different sections of the society उनके अंदर काफी differences हैं. At one side we see the children are marrying at 28, 30, 32, 35, and they are not going for the issue for next 5 years because of their, उनको अपना career बनाना है. तो उनको बच्चा नहीं चाहिए. And after 5 years of family planning, they are not able to produce child. They are rushing to the doctors. Whereas in different sections of the society, 16, 17, 18 years they marry, and then after 1 year they have the child. So there is a, एक पीढ़ी में एक पीढ़ी का अंतर आ रहा है. ये जो डिफरेंस है डिफरेंट सोसाइटीज के अंतर्गत, इसको फिक्स करने के लिए the government should have some norms. They have to make a policy. They have to make a population control policy. Either we have two-child norm, population control law, equal.
But we've had that for a very long time, Professor Upadhyay. We've had that policy. Do you think we haven't pushed it enough?
No. Now the debate has changed. I mean, some people talk about a large population. Other people are saying, okay, we have less population. So that whole thing is gone. So no point actually trying to dictate people that what they should do. And that's not going to work. I mean, some states, suppose they ask, okay, have more children, 3 children, 4 children. So China, for example, they had, okay, 1-child policy, then 2, now 3, or they allowed. That thing does not work. I mean, if suppose the forces are like that, when, I mean, women's go...
50 crores of the children to take birth. 50 करोड़ बच्चों को जन्म लेने से रोका है. एंड आज चाइना अमेरिका की आंख में आंख डाल के बात कर सकता है. अगर वही 50 करोड़ और अधिक संख्या होती चाइना की, वहां रिसोर्सेज की मारामारी होती, वहां अनएम्प्लॉयमेंट होता, वहां बहुत सारी समस्याएं होती, तो उस तरह डेवलप नहीं कर सकता.
तो ठीक है ना, but they are thinking, yeah, but how come actually they want to increase their population now? Look at that. China is trying to promote population. Russia is trying to promote population. So many countries, but that's not our problem. Our problem actually is quite distant in that sense.
Our problem, Professor, right now is about lower fertility that we are discussing, and many economists are arguing that on the flip side, lower fertility is actually a sign of development, better education,
so that's okay.
better healthcare, women's empowerment. Which of this is true?
So I'm saying,
which of this is true?
No, I'm saying that's fine actually. So we are in not a bad situation right now, and let people choose their own things that way. So there's no need for any intervention on the part of the government or anybody.
No, but
actually,
Professor, countries like Japan, South Korea, even
Yeah,
China,
yeah.
they are now
Yeah.
struggling with aging populations. There are labor shortages over there. There is slowing growth despite trying
Yeah.
incentives.
Yeah.
So has India reached a stage now where
No,
reversing
no.
the
I'm
trend
saying
later,
actually-
if you wait for the trend to
Yeah.
reverse, could it become more difficult? Do we
No,
need to make some
but
corrective
our-
action now?
Our population is going to increase for 30, 40 years. 1.7 billion we will be in 30, 40 years. So how do you compare Japan and India? Japan population is declining now, and countries actually which don't allow migration. So they have the problem. America is not still facing any problem because they allow migration. And people like Musk, I mean, they, on the one hand, actually they oppose migration in Europe and America and then on the other hand, it's saying, oh, there's less population. On the one hand, actually, they are setting up these AI things, data centers and so on, which means actually they won't be needing human labor, and then say, okay, low population is going to have effect on economy, on production. Why do they need people? They are replacing people with AI things. So I mean.
So you're saying don't go by what Elon Musk is saying. I want to understand from the business perspective, Balasubramaniam, if perhaps we have a better line with you this time, if fertility keeps falling over the next 2 decades, what could it mean for business, for India Inc. in particular? Could India eventually face labor shortages while still we are battling unemployment at the same time? Could that be a real issue?
It could be a real issue because right now the number of elderly people per 100 people in the population is only 16. But by 2050 or so, when the population peaks, this could double to about 30 out of 100 people. So the burden of being able to support elderly people on the population is also going to double, which is why I said we have a very short window of maybe 20 to 30 years within which we have to become a developed country where our GDP per capita also catches up with where our GDP is. If it does not happen, then like I said, there is a very real possibility of us becoming an old country before we become a rich country. But if you look at the case of Japan, they are old and also rich.
But like Professor is saying, can technology, automation, AI, can they compensate for a smaller future workforce?
The smaller future workforce that we're talking about is several decades away. But before that happens, we need to make sure that we are front and center of the productivity unlock that is going to happen because of the advancements in technology, automation, and specifically AI. If we miss that bus, then it's going to create a disproportionate disadvantage for us, wherein in the next 30 years or so, while the population peaks and the workforce shrinks, we will productivity, which is why it's extremely important for governments, policymakers, and corporates, importantly, and educators as well, to focus on skilling, making sure that the workforce that comes out is job ready, which today isn't the case. Hardly 5% of the workforce that is at an entry level today has received proper formal education, which is job ready. Now, unless that increases to above 50%, then we have a real problem. So that is the problem we need to solve for. And this falling fertility rate isn't the problem to solve for.
But also socially, Dr. Munjal, countries that are facing fertility decline, they are now offering these tax breaks, there is childcare support, longer parental leave. Do you think India needs a serious family support policy framework before the problem becomes much larger? Do you think that's a need of the hour at all?
Well, because we see individual patients, so I feel the policies should not be focused on how many children to have, 2, 3 or 1. It is more like how many children, to make it easier for couples to have as many children as they want. So I personally feel sitting in an infertility clinic, there are many couples who are actually not able to have as many children, and they actually end up having few children because they cannot. It's, they are not able to fulfill their desire of having the number of children they want to. See, human biology, if you understand the human biology, life expectancy has increased. People are living till older age. Careers have increased, opportunities for women and overall career have become longer, delayed marriages. But a woman's biological clock, ovarian biology, it is still the same.
Right.
So biological clock keeps on running, it keeps on declining, and more career is prolonging, more and more late marriages, late childbearing is happening, and infertility is becoming a major public health issue. Even WHO has stated it as a fertility treatment should not be treated as a luxury treatment. It should be accessible, affordable to every person in the world. And this addition has been done by WHO very recently, that infertility is a public health issue.
True.
And 1 in 6 couples are getting affected by infertility globally. And if we talk about India, the prevalence of infertility is 10 to 15%, which is a huge number. If you ask proportionately over global trend, around 15 million couples are facing infertility in India too. So understanding the policies as a clinician, as a doctor, it should not be imposing people to have how many children, but it is about giving them that freedom to decide. So many people are not even able to have 1 or 2 children just because their biological clock, they are out of time, they can't afford. And when you said the child care support system is lacking, work-life balance is not there. There is so much stress in urban population.
True.
They don't have time for the child. So all this prevent them to have more babies also.
But that's a very urban phenomenon, and we are seeing a dichotomy between rural and urban India as well. But this falling fertility rate, not a simple story of just too few babies being produced. It is a story about changing aspirations of India. There are rising costs, there are urban pressures, women entering the workforce. A country that is transitioning, both economically and socially. That's where the real challenge is now for India. Not just how many people we have, but whether we can create a productive, skilled, and an economically secure society before our demographic window begins to narrow. And that is about a couple of decades at least away from us in the future. So because a demographic dividend is never permanent, it has to be converted into growth before time runs out. Right now, we have that demographic dividend, and we have to be able to build on it. I want to thank my guests for joining us, Professor Upadhyay, Balasubramanian, Dr. Munjal, Anil Chaudhary. Thank you for this important conversation tonight. And the takeaway is very important right now, that India's population story no longer is about the numbers. It is about creating the social and economic kind of conditions so that there is affordability, and having a family is not going to be that much of a challenge. How much of a society can India create that is conducive to it is a story we are watching. I'm Vikram Oza on The Big Question. Thank you for joining us.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question.
Hello and welcome to this special broadcast coming to you from India's national capital, Delhi. It's been 12 years of Prime Minister Narendra Modi's government. Of course, they've been speaking about the technological leap and of course the economic development across the country and a renewed diplomatic push. And they also speak about the 2047 development agenda. But there is, of course, the reality of the day, which is the West Asia crisis. And that's why we are here to discuss this and a lot more with Union Minister for Petroleum and Natural Gas, Mr. Hardeep Singh Puri. Thank you very much, sir, for joining us. Let me begin by, in fact, asking you about this crisis. And that's the crisis of the common man. You know, for 12 years, Prime Minister has spoken of the common man and with the common man. But there's a burden of the natural gas. And this is a huge burden from the natural gas, the cooking gas to the petrol. And there's a huge crisis. How long will the common man suffer, sir?
First of all, thank you very much for having me on your show. I've been a part of the Honorable Prime Minister's team for 9 of the 12 years. What has happened in the last 12 years, I think the facts speak for themselves. If you were to take any compilation of figures, I think they tell a story of remarkable and I would say revolutionary transformation. Where was India in 2014? Where is India in 2026? Gas, you were talked about gas. There were 14 crore gas connections. That means 14 crore families were led. Today that 14 crore has gone up to 33 crore, 30 lakhs families are connected. Pipe gas was 14,000 kilometers. Today it's 25,600 kilometers of trunk pipeline, going up to 30,000 kilometers. Ujjwala Yojana was introduced in 2016 for the economically weaker section. That today has 10 crore 60 lakhs beneficiaries below the economically weaker sections, below the poverty line through a system. You're talking about the West Asia crisis. Do some context setting. The last time prices were raised in India was in February 22. Okay. And that was also when the Ukraine-Russia conflict took place. So it's not just one crisis. We have been through several global black swan moments. Yeah. The pandemic, which ended just before 22, was one of them. It didn't end, I mean, it eased off. Today, we are in the happy situation that between February 22, when it was the last time the prices were increased, there was never any increase of price till February 28th of 2026, when the West Asia crisis started. In other words, 4 years, people said, चुनाव आने होते हैं तो आप लोग दाम कम कर देते हो उसके बाद बढ़ा अरे नहीं भाई February 22 के बाद we had general elections in 24 we've had elections to state governments in Maharashtra, Madhya Pradesh, Haryana, what have you. Prices were never increased. In fact, prices came down. What happened on February 28th? The facts are that the 90% of the crude imported by India used to come through the Strait of Hormuz. And nearly 60% of the LPG that India imported came also through the Strait of Hormuz. Yet, despite a massive global disruption, despite the fact that the Saudi CPU, which is the benchmark for LPG, went up by 50%, we did not increase prices. Why? Because as I said, after February 22 on 3 occasions, November 21, May of 2022, and now a few days ago, the central government, thanks to the resolute leadership of the Prime Minister who believes in insulating the common man as an article of faith. For him, it's an article of faith. He took the hit on the central budget, as a result of which rupees 10 per litre on petrol and rupees 10 per litre on diesel were both absorbed. 1 lakh crore ka bill aaya, finance ministry took it. I mean, if I was in the finance ministry, I would also say, they're having to pick up other people. But that is the Prime Minister's leadership. Today, interestingly, if you take Japan apart, Japan is the only country which has had an increase lower than India.
Right.
We are the country with the lowest increase in petrol prices or diesel prices or gas prices. Plus, if the opposition is talking about that, one question that they need to ask themselves after looking in the mirror is what is happening in the states where you are. Central government reduces the excise on central excise on 3 occasions, November 21, May 22, until recently. And we expect the state governments to correspondingly reduce their VAT. But do they do that? No. As a result, petrol and diesel prices are lower by 10 rupees in BJP ruled states that they are in other. In Delhi, for instance, BJP 102 rupees, Uttar Pradesh 101 rupees, Gujarat 101 rupees, Tamil Nadu 107 rupees, Karnataka 110 rupees, Kerala 115 rupees, Telangana 115 rupees. यार 15 रुपए का फर्क और 10 रुपए का फर्क between a BJP ruled state and non-BJP. That, my friend, is one of the reasons why the narrative that the opposition parties try to set against this government comes a cropper.
All right, we began by speaking about the West Asia crisis. Sir, you've been following it very closely. It's now 100 days of that West Asia crisis. How is India and the Indian government coping with the energy supplies right now? What is the situation right now? What is the stock that we have presently? And how are you trying to diversify?
You've asked an easy question because your question is how are we coping and what is the stock? Some of your other colleagues who done interviews with me earlier were trying to trap me into a hypothetical situation as to how long can you last this and how long will you... Right. Insofar as the current situation is concerned, I can tell you, thanks to diversification of sources, instead of buying from 27, we are buying from 41, buying from wherever we can. Earlier, we used to buy 5 million barrels a day for consumption, and we used to buy about 800,000 barrels, which used to come from the Saudis, the Emiratis, the Kuwaitis, Iraqis, and the remaining 800,000 from, all put together. After November 22, when we were buying 0.2% from Russia, now we were buying much more from Russia.
Right.
Let me also clarify this thing about the waiver and non-waiver. Look, there were 2 Russian entities which are under sanction, Lukoil and Rosneft. When that waiver was lifted, everyone who was not buying from Russia, because of whatever factors, Europe, because of they had weaponized, they had ideologically looked at energy and weaponized it, Japan, they all started buying them. So Russian prices went up. Venezuela is the largest producer in the world, largest stocks in the world. Mm-hmm. It was selling only to China and to Cuba and 1 or 2 other countries. Now those sales have got banned. So India is present there. If we raise their production, help them raise their production from 1 to 3 million, we can buy more. Suddenly Venezuela has become a big fella. 500,000 barrels a day or so? But before the waiver, during the waiver, after the waiver, Russia has been, even in the month of February, we bought 1.04 million barrels a day from Russia. Today it's 2.5 or so. Basically, it is clarity of purpose, absolute focus that you need to ensure that your consumer has availability at all times, that there was no shortcut or no cutout. Availability followed by affordability. The part I gave you about cutting excise and reducing prices was part of the affordability, and sustainability. We are making the transition from 1.5% of biofuel to 20%, introducing E85 flex fuel vehicles, going into green hydrogen, which is the fuel of the future. So all I can submit to you is that on all fronts of energy, and why is energy important? Look, apart from everything else, 90%, 19% of your tax revenue comes from this sector. Employs a lot of people. Its inability to deliver on availability would result in chaos here. Believe me, if a country of India's size, which is used to, today, I asked somebody who 9 रुपए 7 रुपए 60 पैसे जब गैस के और पेट्रोल और डीजल के दाम बढ़े, forget about people who cite you surveys, some of them are surveys, some are fiction writing. I called somebody whom I trust on the ground level.
Yes.
I said, बताओ इसका 7 रुपए 60 पैसे बढ़ाने का क्या हुआ? He said, भाई साहब असलियत ये है कि जब ये युद्ध शुरू हुआ, people thought के पेट्रोल डीजल मिलना ही बंद हो जाएगा.
अच्छा.
अब किसी ने अगर आपने 7 रुपए 60 पैसे बढ़ा दिया किसी के सेट में 50-55 लाख रुपए की गाड़ी चलाता है कोई, उसको फर्क पड़ता है कि 7 रुपए पर लीटर अगर वो 35 बनाया, या मोटरसाइकिल जो चलाता है उसको तो और भी कम है. और ना वो ये E85 जो हम बेचने जा रहे हैं, जो हीरो कॉरपोरेशन बनाएगी मोटरसाइकिल, वो 20 रुपए कम का बेचेंगे. बिकॉज वो कह रहे हैं एथेनॉल में थोड़ी सी नॉकिंग तो ठीक हो जाती है, एक्सेलरेशन भी बढ़ जाती है, पर थोड़ी उसमें क्या कहते हैं कैलोरीफिक वैल्यू ऑफ पावर थोड़ी कम हो जाती है, इसलिए हमने कहा उसको 20 रुपए कम का बेचो. आई थिंक फुल मार्क्स टू द प्राइम मिनिस्टर. ही इज कैरिड आउट, ensured availability, he's ensured affordability, and the sustainability transition is going on. So all said and done, I would say on the energy part we're doing all right. How long can you sustain it? Now this is a point. Some of your colleagues try to trap me. I told them, I said, any crisis has to have a time context. If it goes on, then it's not a crisis. Then you are in depression, yeah. Right. I mean, forget about everything else. What is the situation of prices at the bunk in the United States? Prices have gone up 40-50% there. What is the situation of countries in our neighborhood? LPG prices. हमारा सिलेंडर 900 रुपए 940 रुपए और 42 रुपए है, वहां पे 1300 रुपए 1400 रुपए. So energy management is essentially the art or science of what is doable. अगर 30 दिन 60 दिन ये crisis और चला, yes, we'll manage. उसके बाद, you know, all the bets are off. You don't know how you're going to do. That's why when somebody was trying to ask me a question, can you give a categorical assurance that prices will not give up? मैंने कहा, यार, first thing I've learned as a member of parliament is I choose my words in such a way that you cannot tomorrow interpret it as a assurance.
So how much is the per price barrel that we have been paying on an average in the last 100 days?
Per price barrel in the last 100 days, इतना ही है जितना अभी है. देखो, because pre-crisis it was around 70 or so. Now it's about 95 or so. Today, I don't know, it's gone up to 94, 95. It has gone up to 102 sometimes, but it's about 94, 95. I would think so. But forgive me, this is, you asked me a question and this is a statistical question.
Not trying to trap you.
No, I don't. This is not a trapping question. I could easily say that, let me have my statistics or what is that called? PPAC check it back for me. No, but I think my colleague sitting here also, I think currently that's the average price.
You know, you spoke about the waiver. There's a two-part question. One, would it be wrong to say that we are primarily getting, you know, energy from Russia at 38%, which has been reported today? You can correct me if I'm wrong. No, secondly,
we are getting. You please carry on.
And second part, that you met the acting president of Venezuela, Rodriguez, recently. How are we trying to diversify on that front?
See, there are two things that you must remember. The first is we will buy energy from wherever it is available at the most reasonable price.
Right.
Our purchases are tenders issued at the point of importation. Say I want light Basra in, say, Visakhapatnam. I'll say, please let me know. If we have a term arrangement, one thing. If a spot arrangement, somebody will give you a quote, a committee will go into it, whatever you can get.
Yeah.
Venezuela has the world's highest reserves of oil. Because of a series of factors ensconced in geopolitics, they used to produce 1 million barrels a day, which was going largely to China, some of it to Cuba and other places. Because of the Trump-Maduro arrangement, that exports to China has been banned from there. So they need another buyer. We have a presence there. We had some money stuck there. OVL, one of our companies, has invested there. So when the acting president came, Delcy Rodriguez, I met her, but this is the 4th or 5th time I'm meeting her, by the way. I've met her in the last few years on India Energy Week. I met her outside India also once.
Yes.
The point I'm making is that the kind of crude that the Venezuelans produce, which is the heavy crude, that the Indian refineries are configured to deal with. So we are very happy dealing with it. So will our imports from Venezuela go up? They have already gone up. From virtually nothing, they were about 500,000 barrels a day. They could go up more. Similarly, as I said, we've gone from 800,000 barrels a day from 5 countries in the Gulf to more from Russia, now more from Venezuela. We are buying from Argentina, we are buying from Brazil, etc. All said and done, our purchases will follow the global situation.
Right.
I am reasonably convinced that there is no shortage of oil in the world. All that is being done, you're seeing now, are artificial, man-made shortages where a group of producers decides to cut back on production or somebody else pulls back on something. Today we are in the situation, more oil coming from the United States. By the way, I bought $15 billion worth of energy from the US.
You know, I was about to ask that, if I can stop you. There was a mother of deals that was, announced earlier this year, at least a political declaration between India and EU. And now Sergio Garces, the US envoy, that only 1% of the deal is left negotiations. Anytime, perhaps by next month, there could be the India-US deal. The US deal now. And how is that diversification going to help 10% of LPG and other diversification?
No, it's very simple. Our demand is huge.
Right.
If you are buying $15 billion worth of energy from the US, it is conceivable that if the price is right, you could buy more, 20, 25 billion. I mean, this is what I think the ambassador meant was that I don't quantify. Piyush ji would know that better. It's a very important deal. I mean, somebody said, no, you guys don't know how to deal with Trump or this, that. It's all dealing with an elected head of state of another country or unelected or, whichever elected in a different form. That's part of your relationship with the world. And I don't think of any Indian leader can come close to matching the kind of success that summit diplomacy is being managed by Prime Minister Modi. I mean, he's equally at ease with President Trump, with President Macron of France, with the Prime Minister of UK, with President Putin. He deals with President Zelensky, with Xi Jinping. Now, how important is it? It's very important because when a summit level meeting takes place, broad templates are discussed, objectives are set, then the rest of the system. Look, governments do not buy energy. Please, whether it is individual economic companies, entities,
of course,
private sector and they buy. They will buy on commercial terms. They have to justify it. Okay. Now, what can we do as a government? We can have government-to-government relationships. We can sign MOUs with them. I'll give you one example. When we started this period of trial on 28th February, I was never really worried on crude oil or natural gas. I was worried on LPG. I'll make a frank confession. Sure. So I reached out to my colleagues and friends. One of the people I call regularly, who calls me, Sultan Jaber, the head of ADNOC. And I told him, I said, friend, I need something over and beyond the strength of our relationship. I need more LPG cargoes. And the Strait of Hormuz closure, they diverted some through a pipeline from the other coast, etc. He called me 3 nights ago and he said, late 10:30 at night, and he said, brother, I've got the cargoes ready, but your ships are not here. The ships have to come. Late at night, 10:30, 11, I got hold of, through my office, the oil marketing company. What's wrong with you guys here? You made me ask him for this thing, where a ship? They said, we got nervous in between. So we sent the ships to the alternate destinations. We sent it to the US here. But to cut a long story short, by 11 o'clock the next day, the ship had also, the ships had been arranged.
But sir, are the shipments still coming from Strait of Hormuz? Is that true?
Well, yes, we got 15 out. I don't talk too much about it. Slowly, this thing, not ours, other shipments are also going.
There is some arrangement at play with Iran?
No, they have been good to us. I mean, all sides have been good to us. If your question is, have we paid any toll? The answer is categorical no. That is categorical, because I was anticipating that question. So we are in the happy situation today that we managed to get out. But today we've also done something more. We have ramped up domestic production. We used to produce 32,000 metric tons of LPG per day in our refineries. We've taken it up to 54,000 metric tons per day.
Right.
Kahan 32, kahan 54. And out of the supplies, we've diversified the supply. We are buying from the US, we are buying from Australia, wherever we get the consignment from. So we are in a more comfortable situation.
All right. From energy, if I can move a little bit towards politics, a couple of last questions on politics, sir. India Alliance meeting is happening right now, even as you are marking 12 years of the Modi government. I'm coming from Bharat Mandapam, where the top cabinet ministers were interacting with the editors. And while the presentation was given, the India Alliance was meeting, and
it was collapsing. It was meeting and collapsing. Look, for instance, I mean, they say nasty things about us, so I'm not going to join the in a quid pro. But I do feel that the India Alliance from the day go was characterized by internal contradictions. I saw an interview by my very close friend Sanjay Jhaji in some newspaper, where he explains how the India Alliance was, how some people were driven out by the statements of Mr. Rahul Gandhi. Before the West Bengal elections, he said nasty things about Mamata Banerjee, that if she had ruled it better, there wouldn't be a problem. By the way, she's one of the few leaders attending it.
Yeah.
He attacked the left. He attacked the DMK. He moved out of the DMK. Today, the India Alliance is a former, is a pale shadow of what it set out to do. It set out to become an alternate. But today, the Congress party is not even being accepted as a junior partner by others. And today, apart, even in the state where they are in power, in Kerala, in Kerala they are, but even in Karnataka, etc., there are contradictions there. I think the India Alliance will stutter along like this. A lot of people will leave them, go into new formulations. I see some Rajya Sabha MP from the TMC with 3 years to go, resigning. Going ahead, I feel that the leadership of the Congress party in leading that alliance is something that constituent elements will need to reflect on.
They are also saying that the SIR process, which has been in many ways a successful model, at least in West Bengal, we've seen that. They're saying this is flawed again. And they're also saying that the voting rights of the common man were impacted by this SIR process. The Congress and
where in Kerala, where they won, there the voting right was not impacted. It was impacted where they lost. But just look at the nature of the defeat in those places. I mean, I will send you through a series of states where I've actually looked at the data. In fact, the SIR has benefited them in several constituencies. Look, the starting point of SIR is that only legitimate, bona fide people should be voted. If you're an Indian citizen and you're in a state A, you can move to state B and transfer your vote. But if you're not a citizen of India and you are brought in, and all those interviews being done by reporters or people, they say, "Haan, hum to Bangladesh se aaye the," whatever it is. That thing has to be resolved. And I think West Bengal is a good cleaning process.
I actually wanted to ask you on West Bengal, because there's been a historic mandate to the BJP, and I know you're looking towards Punjab now. I'll come to that. But on West Bengal, we've seen continuously, the TMC MPs and MLAs now resigning. In fact, there was a meeting organized by Mamata Banerjee where many couldn't turn up. How do you see this turn?
Well, I'll tell you something. You're asking a very good question before you come to Punjab.
Yeah.
I would like to draw your attention to the resignation letter of Mr. Sukhendo Shankar Roy. He writes Rai, it's pronounced Roy. He's a TMC MP that served 2 full terms. He was in the 3rd term. He got 3 years to go. And what does he say? 3-4 reasons I recall from that. Anarchic rule of the TMC. Rampant corruption. There's a TMC sitting MP. Okay. 3rd, atrocities against women, and so on. Now, for heaven's sake, He's not talking in the air. What happened in that KG car? Okay. What happened in that teacher recruitment scandal? You know, even bundles of notes were burnt in that building. Whom did we give a ticket to? We gave it the ticket to the mother of the victim, and they gave the ticket to whom? So the general perception is, now I've heard some TMC MP saying, why didn't they resign earlier? Bhai, that's a part of politics, but he is resigning now. So I think the TMC is facing internal revolt, would not be too strong a term. But the TMC, along with others, is also introspecting as to where the India alliance stands.
Right.
Today, if you were, let's say, disillusioned with the TMC and you were, let's say, anti-BJP, where would you go to? Congress? Does that inspire confidence? But no matter what you talk about ideology and Samaj Seva, you also have to look at where the prospects of growth are. So I am saying that the West Bengal, I agree with you, I endorse your assessment. It's been a mind-boggling, revolutionary verdict. And I think in the growth, in the dynamic of the Indian democracy, West Bengal will continue to be cited as a case where after 15 years of TMC and God knows how many years of CPIM earlier than that, and yet in one go, you are rid of that.
All right, final question to you, sir, is on Punjab, a state that you love and I love as well. But TMC isn't alone. Aam Aadmi Party has seen a breakup. There are several parliamentarians who have joined the BJP. But is there a realistic chance this time that the BJP could come to power? And secondly, what is the kind of situation that you are seeing Bhagwant Mann in right now? Because there is one, security, second is the politics of it, and third is the governance model that is impacting the common man.
Well, if you were to ask me prior to the last round of state elections, where do you think you have a better chance of the incumbent government getting unseated, West Bengal and Punjab? My answer, I'm cautious, I choose my words, I try to, sometimes I don't succeed. I would have said equally, I would be equally hesitant in both. I said both the incumbent government in Kolkata and Punjab, Chandigarh, needs to go. I would have said that. But something very interesting has happened. After the victory in West Bengal, suddenly everybody seems to saying we can do it in Punjab also.
Yeah.
And adding encouragement to that is the, those local body elections, where, normally the sitting ruling party wins over. They came below 1,000. Our numbers increased 3 times. They went from 70, 80 to 3 times or whatever, 50, 60 to that. But it's a trend. But coming to Punjab, I have a very basic submission to make. Because we were the junior partners in an alliance, we never contested more than 23 out of the 117 seats.
That's right, yeah.
As a result of which we didn't have any presence at all. Today, I think we've reached a situation, because we're going alone, at least in half the things, we will have a formidable presence there.
All right.
So if it's a 4-way fight between the Aam Aadmi Party, governance model, I'll just say the facts speak for themselves. Fiscal irresponsibility, law and order, they were supposed to be Nasha Mukti, it's become worse. Now state instruments of the state, the revenue administration people, ambulances, they're delivering synthetic drugs to the population. On all fronts, I think the government stands indicted. I'm not surprised those 6 of them came across to us. In the run-up from now to whenever the elections are due in Punjab, I see more and more people coming across to us. All said and done, I would say, Punjab today, I'm much more hopeful than I was earlier.
Minister Puri, as always, thank you very much for joining NDTV.
Thank you.
Pleasure.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. the Tesla Model Y. This is Tech 360. Real talk, real reviews across.
Hello and welcome to The Bottom Line. I'm Vikram Oza. While the headlines tell you what happened, this is the news show that focuses on why it matters. Up front, these are the news that we are tracking this evening. Up front, we're looking at 100 days of war in the Middle East, impact on the markets, crude oil and trade. Peace talks are underway. Iran calling off military strikes on Israel after Trump's request. Oil prices ease after Iran says that military operations against Israel are over. Brent crude hovering around $94 a barrel. The market slides 1.5%, the Nifty ending at a 2-month low today as investors get spooked by renewed tensions between Israel and Iran. Wipro remains the top loser after trading ex-buyback on Friday. In the currency markets, rupee has ended near its low point of the day at 95.71 against the US dollar after being the best performing currency on Friday. The fall in the currency because of the drubbing across asset classes as crude prices rise amid renewed tensions. In response to questions by NDTV Profit at the ISEC conference, SEBI Chief Tuhin Kanta Pandey says that SEBI and RBI are working together to introduce derivatives on corporate bond indices. And also a faster FPI onboarding path is in the works, he says, with custodians' timelines aligned to boost flows, confidence and stability. The government cut subsidized LPG cylinders under the PM Ujjwala scheme from 9 to 4 per household as rising global fuel prices continue to increase the cost of supplying cooking gas. Mumbai's Water Tank Association goes on strike today over registration and licensing disputes. No breakthrough in the meet between the association and the authorities. Now the question remains, is there a bigger water crisis ahead? In tragic news, a powerful 7.8 magnitude earthquake striking a southern Philippine island. At least 12 people have perished so far. Massive tremors have damaged and collapsed several buildings, including schools and commercial structures. Our top line on the bottom line. This is our lead news stories. It's now about 101 days since the Iran conflict began, and the impact is visible across markets, commodities, currencies, and capital flows. There are some signs of de-escalation. Iran has said it is ending its military operations against Israel, at least for now, but has warned of a harsher response if Israel resumes strikes in Lebanon. The statement coming even as President Donald Trump has continued to push for both sides to stop hostilities, though Israel has indicated that it remains prepared for a prolonged conflict. For India, the economic impact has been quite significant. Brent crude up nearly 33% since the conflict began, and it continues to trade around $97 a barrel, which keeps pressure on import costs, on our inflation, on the current account deficit. And the foreign investors that are pulling out nearly 2.8 lakh crore rupees from the Indian equities during this period, that has its own impact. The Indian currency as well, the rupee has weakened almost 5% since the conflict began. So markets too have felt the pain. The Nifty is down close to 7%. The Bank Nifty has fallen more than 9%. But the surprise in all of this has been the resilience of the broader markets. Small caps have still gained more than 8% despite that volatility. So the bottom line over here is that the economic battle is far from over. And for India, crude oil remains the single biggest variable that one has to watch. And that is going to be key on our agenda as well. Meanwhile, looking at all that is taking place when it comes to the conflict, now the Lal Street today has ended deep in the red for a second straight session. Geopolitical tensions in West Asia have continued to weigh on investor sentiment, the Nifty having lost more than 1% and has finished near the day's lows. A broad-based sell-off across sectors today. IT, you saw Wipro, the biggest drag on the index, falling nearly 8.5%. Geofinancial, on the other hand, Geofinancial Services as a stock has ended sharply lower in trade today. The pain even more visible in the broader markets. Today, the mid-caps have lost more than 1.5%. The small-cap index has fallen more than 2% and has underperformed the benchmarks as that risk appetite has weakened. Sectorally, a sea of red. Realty, metals, auto, all of these have ended lower, and that reflects the cautious mood on the street. Meanwhile, the rupee has closed at 95.71 against the dollar today. It edges towards its intraday lows as investors have continued to track developments in the Middle East and their potential impact on oil prices. Like I said, that's the key monitorable. Meanwhile, in the state of West Bengal, we're seeing that CapEx push gathering pace. A sharp focus on electronics manufacturing, also railway infrastructure. My colleague Sharad has been looking into the developments in the state of West Bengal. He's joining us. Sharad, if you can help us with that list of the various announcements coming through from companies in the last month or so on the fresh investments they're making, the kind of expansions they're doing in West Bengal.
So over the last 2 to 3 odd days, interesting announcements have been coming in. Keep an eye, especially for Dixon Tech, Sirma, Amber Cairns. Largely, there is an electronics manufacturing policy at play. It's expected to be expanded, and they would be leveraging the 2 clusters which are there in West Bengal, especially in this EMC conclave. The names, of course, are Nai, Hati, and Falta. These are the areas in West Bengal where they are looking for interesting expansion in this space. Apart from this, railway stocks are also in focus, especially the wagon-related manufacturers. A 1 lakh crore railway infra project is being made. There's Delhi Siliguri bullet train, Kolkata metro expansion, east-west dedicated freight corridor. Of course, this includes your Titagarh Rail Steel, Jupiter Wagon, RVNL, to name a few. Indian Railways is also planning a 40,000 crore wagon order as well, and this is largely coming in from the companies which are based out of West Bengal. Infra-related companies, JSW Infra recently came out with its exchange filing where they have operationalized Berth 7 at Netaji Subhash Dock, which is located in West Bengal. Also, they have secured a 832 crore order from container terminals. Shah Metalics has committed roughly 10,000 crore worth of ongoing capacity expansion as well. So over the last 1 odd month, we are seeing interesting infra-related push happening and a lot of announcements coming in. NBCC, there is a fencing, which is where the pending orders comes in. Also, Bata has announced expansion in the eastern region. And of course, CSC is also another stock where the state government approval has come in.
All right, Sharad, many thanks. That helps us understand how exactly this is panning out in West Bengal, whether we're talking about fresh investments or expansions by companies. Meanwhile, the RBI's current data shows that India's external balance is holding steady, but there is some churn that is underneath. In the March quarter, the current account surplus has narrowed to $7.1 billion, which means it's down from $13.7 billion just a year ago. And this is largely because of a wider merchandise trade deficit, which is of $83.4 billion. But services continue to be the big cushion. The net profits have risen to $60.4 billion, and that has been led by strength in IT and business services exports. And on the flows, FDI has improved. It's gone up to $4.2 billion. But FPI outflows have doubled to $12 billion. So that signals that there is some global risk-off sentiment. And forex reserves have seen a modest quarterly rise. On a full-year basis, though, reserves have dropped sharply, and that is $23.6 billion. This is the data coming through from the RBI. So overall, the current account deficit for FY26 stands at 0.6% of GDP, which means it is steady, but there are pressures that remain. Meanwhile, the Bombay High Court has delivered a major relief to telecom operators, and the court has now struck down the centre's one-time spectrum charge. The court set aside that 2012 decision that imposed additional charges on spectrum that was held beyond 6.2 megahertz. It's a levy that was applied retrospectively from July 2008. Let's put this in context. My colleague Nimit is joining us to do just that. Nimit, explain to us the court's decision in retrospect.
Yes, Vikram. So it comes down to this, and it's all about predictability, right? Because the spectrum charge that was imposed in 2012 on a contract that was granted in 2008. So companies say that you can't midway through a contract change the rates that apply to us and ask us for more money. This comes down to predictability in contracts when you bill into a contract, and it provides a major relief for the telcos here, in this case Airtel and Vodafone Idea. And for Airtel, this amounts to about 5,200 crores. And for Idea Cellular, which was erstwhile Idea Cellular, now Vodafone Idea, amounts to 1,069 crores. The key finding here is that the Bombay High Court says that the centre failed to justify the retrospective imposition of the spectrum charge, and it said that when the contractual consideration has already been paid under a particular regime, which was the contract signed in 2008, you can't then unilaterally go and change that. And rejected, crucially, the centre's argument that this will mean more revenue to us, which means public interest. But the court said no, just revenue maximization is not public interest. Clarity and predictability in contracts is key to public interest as well.
So clarity in contracts is something that the accent has been put on by the courts. Thanks very much for putting that in context. Telecom analyst Mr. Uppal is also joining us. Mr. Mahesh Uppal is here. Sir, this is a significant setback for the government. A major relief, of course, for telecom companies. But legally, how important is the observation that is being made by the court that license terms cannot be changed retrospectively after spectrum has already been allocated?
I think it is a very important decision, and I think it is on the right line. The government's argument had been that the spectrum that the telecom companies have has been given, has been given on different terms since the inception of mobile telephony in the mid-90s. So they were, since the price of spectrum when it was discovered in auctions was very high, the government in a very sort of slipshod manner tried to recover some of what it thought were losses to the exchequer through this one-time spectrum levy, which I think the court is right in saying no to, because these things need to be done transparently as well as objectively. I believe neither was evident in the government's decision. And it's a good decision of the court. We hope that it will
It is also, Mr. Uppal, it has also said, the court is saying that revenue maximization alone cannot define public interest. So, in your opinion, does this judgment effectively draw that line on how aggressively the government can monetize telecom spectrum going ahead from here?
To some extent, yes, but the courts have interpreted these things in different ways, but I think it is good that they mentioned this in this context. But I mean, to suggest that this is the final word on revenue maximization not being a priority, I think would be a little bit of an exaggeration. But yes, I think it would make future telecom leadership think twice before moving on these lines. But yes, in the past, the courts have given similar but not quite consistent position on revenue maximization.
So clarity coming from the court on the kind of monetization that happens on the revenues on spectrum. That's an important piece, and we'll be tracking this very closely. But Mr. Uppal, thank you very much for joining us with your quick take on the court's decision.
You're welcome.
Meanwhile, we are looking at the AI debate in the United States is taking an unexpected turn. Now, the American President Donald Trump has floated the idea of the US government taking small ownership stakes in leading AI companies like OpenAI, like Anthropic. And the argument is that Americans should share in the value created by what could become a $1 trillion business. Trump has confirmed that a meeting with major AI companies is expected next week. In fact, listen to what he said.
No, there's a concept out there. There's so much money and it's so big that there are concepts where pieces could be given to the American public, where the American public essentially becomes a partner with the companies. And I will tell you, yeah, I have spoken to all of them. There's something very interesting about it, where it almost becomes a partnership with the American public. And we'll look into that. Whether we are looking, I actually have a meeting scheduled in the very near future with, did you know that, with all of the companies, and we're talking about it, where the American people can benefit from the success of AI, and by doing that, they're going to like it better, because we're leading China, we're leading everybody in the world with AI, and we want to keep it that way. It's probably the biggest industry maybe that we've ever seen.
Which companies?
All of them. All the big ones, yes, all the big ones. They're all coming to the White House probably next week.
So probably next week, we can expect those AI giants meeting the President of the United States. That proposal is still at an early stage, but it highlights this growing concern that if AI creates enormous wealth, who should really benefit from it? To decode this further, let's speak to Pankaj Srivastav. He's joining us, CEO and co-founder of UnoSearch. Good to have you with us, Mr. Srivastav. A remarkable idea from Donald Trump, one would have to concede, a government stake in private AI companies. So you think this is really about sharing future AI wealth with citizens, or is this about strategic control on an industry that is growing leaps and bounds?
We have to think about what is AI. AI is what electricity was for industrial revolution, what internet was for digital revolution. The AI is the next economic lever. So therefore, the governments definitely should have some partnership in the AI. This will create the wealth creation will be of enormous level. And definitely that should be shared with general public also. So the debate.
Yes.
Yeah,
so if the US government takes even that small equity stake in firms like an OpenAI, like an Anthropic, does that fundamentally change that relationship that big tech would have with the state?
That will not change. Why? Because they don't have majority. The government will have a minority, right?
So could this become the AI version of sovereign wealth creation, where the governments directly benefit from the rise of trillion-dollar technologies?
Yes. Why? Because imagine in today NVIDIA's market capitalization more than $1 trillion. AI is expected to create $15 trillion in next decade. So a small portion of that also will mean a very huge wealth for governments, and that will be passed on to the common people.
But do you think this can have an impact on innovation? Would entrepreneurs become uncomfortable building frontier AI if the government wants ownership in the business?
They're going to have a small portion, not the ownership. If the government gets the ownership, the competition gets ruined. I mean, they will control competition.
Yes.
And there'll be a conflict of interest. So therefore, there's no question government will ask for the majority stake or ownership. They may be asking small percentage, which can help masses to own the wealth created out of this new infrastructure.
I'm just saying this sharp AI-led sell-off in the global market. So I'm just wondering if investors are suddenly questioning whether AI valuations have simply run too far right now and too fast, because that's a continuing question that we have about AI.
AI is not a technology. It's an infrastructure like electricity. Think about it like electricity, refrigeration, internet itself. So we are just we have not scratched even the tip of the iceberg.
Yes.
The valuation is going to be extremely big. So therefore, companies like OpenAI, Anthropic, then you will see many more companies coming up like them. So the value creation is of a very high scale.
Yes, indeed. We will keep watching this space as, of course, we're very focused on what happens in the markets and, of course, this meeting that President Trump is going to have with big tech and talking about a share in the businesses. Let's see how that goes. But we leave it there. Pankaj Srivastav joining us with his take on this. Meanwhile, we're looking at Sehmati Foundation having received the RBI's approval to operate as a self-regulatory organization for the account aggregator ecosystem, which is, of course, a key part of India's digital public infrastructure. So speaking exclusively to us here at NDTV Profit, the CEO of the company, BG Mahesh, has said that the focus is on expanding the reach of the network from 15 crore users to 45 crore. And they're also broadening the range of data available through that ecosystem. Here's a small snippet of that conversation.
How would you like to, what would be your first actions now that you have received the RBI's approval? How are you preparing in terms of dealing with the industry? What are some of the changes that you will make, and what are some of the actions for the starters after receiving the SRO license?
for us with the SRO approval, in a way, we are not actually changing things, but we are continuing our journey. See, Samati was formed 7 years ago, and we have been actively working on the participatory governance. So the first 2 years we are